Good morning, Vietnam and Associated Federated States of Micro Indonesia. Good stuff. I just made a quick new thumbnail. That's why we started a little bit later today. Got some George Costanza in there. Yeah, GME is up 10% pre-market with almost no volume. Essentially 1, 2, 3, 4, 5, 6, 7, 8 minutes worth of trade brought the price up. So, doesn't mean much. I will take a quick look at that. Or probably do that right now, actually. Okay, so this is AMC. So you got one trade, 1 minute worth of trading over at the nighttime. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 20, 21, 22, let's say around 35 minutes worth of trading in the pre-market, and that has left us down from a high of 950, where GME on contrast had about 10 minutes of trading in the aftermarket and 14 minutes in the pre-markets. And that's so far, because potentially the next 2 minutes it can trade. Yeah, that's about right. So it's looking kind of slow. I left the chart up. That was a wild ride. Now we're gonna see if today we manage back to the purple. I am doubtful, but if we can at least get close to it, somewhere up here, like 990 by end of day, that's good enough. Gets us back on track. Okay, so the market's going to open in 5 minutes. We'll just chill until then. Everybody gets a chance to get in here and warm up, per se. Good stuff. Yeah, I was just quickly checking up on all the other YouTube personalities. Holy crap. I did a search for AMC stock, and it's just wall to wall to wall garbage. The squeeze is coming. Everything's tomorrow. Oh, man. I got to figure out a way that I can market myself while mocking them at the same time. Just have a post saying, "Oh, it's tomorrow. Oh, guys, it's tomorrow." like get it in everyone's head that, all these thoughts and predictions they make up every day, they're only good for like the next 5 hours, 6.5 hours. They can't predict tomorrow. They can barely predict today. So, anyways, but the fact they can repost the same thing and their audience doesn't burn out is kind of weird. You'd think after like predicting something and getting it wrong like every day of the week, you're somehow people would leave. But holy crap, did they have the amount of viewers? So obviously they're doing something right, but whew, crazy, crazy. So AMC's bounced a tiny bit. That's good since I went and did a little search. I was trying to see if I even show up on the metrics page. But no, right now I'm not seeing anything. Yeah. Yeah. Well, people want to hear what they want to hear, right? They want to hear, what's coming up, how they're going to be rich, everything's going to be all right. And it's like, yeah, it's not how the market works at all. If it did, we'd all be rich. Let's flip over to market open. All right. But yeah, I'm gonna spend some time to like up the quality a little bit. I'm good with Photoshop, but I've just been lazy. So, right, we got 30 minutes or 30 seconds, sorry, till start. So GME is going to start at 11.06%, and we're going to start at 1.29. And I'm not going to clear this just because I want to keep our U-shaped crap. So we'll just leave that up. Okay, party starts. Oh, wait, sorry, I was 1 minute off. I gotta remember the clock on the wall is fucking early. So sorry. Okay, 60 seconds, 50 seconds. Damn, gets me every time. Oh, and it's good to see you all. My name, Howard. Yeah, it is why people like politicians. And it's also why people hate politicians, right? And they're like, oh, they're my best friend. And then it's like nothing ever gets done because they're everyone's friend. But they're actually no one's friend. Yeah. Yeah, you got it. Yep. All right. 3 seconds. 2, 1, and all right. Party starts. So we're starting with a little bit of sell. Let's see the volume, 1.07 million. Not that much, but not horrible. Okay. Dow started down, coming up. S&P down, NASDAQ down. NASDAQ down quite a bit, 0.5%. Okay. So down, 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 and down. GME's down. Okay, that's not too bad. The volume didn't go up that much. So again, those two black lines from yesterday are our two major supports. The bottom one to stop a crash and the top one to break out. So those are our immediate goals. E. All right. Decent. Yeah, we broke through the ceiling. We bounced. See if we actually go through the ceiling. Da. 32 seconds to stay above this line. Good. And there we go. 10 seconds. Yeah, once we got a little bit of distance, that should hold. Unless there's a massive red, we should keep going. Oh, finally. Oh. It's the volume. And that's not enough to reverse us. It's low volume. Ugh. If it gets to the very bottom, see there, you might get a reversal on technical, but the volume's currently not strong enough. So the volume indicates that it's still going to go up. Now, we've used a lot of our buy volume pushing it back. So now if the volume increases and it's red, then they might have a chance to overcome the buyers. We might get lucky that all the sellers have been pushed out. We'll see with this one who's left. Okay, sellers are still there. Still a bit of selling power. But as you can see with the stock, it's about 50-50 right now who's going to win. The advantage is on the buyers in the morning until around 10:30. So if we're not winning, it would mean the buyers are weaker. But the sellers are not taking over with any great strength. We are literally going sideways on decent volume. There we go. Now let's see what the buyers do. That was ultra low volume, if you will, compared to the other ones. Now will the buyers push back? We do have that support line or resistance line working against us. But if we can push this red back to at least the top of the red, we'll get a boost. And then we might bounce off the black line again. But at least there's a chance we might blow through it on the boost. Okay, and all the volume just disappeared. What the fuck's going on? We had all this energy and now it's like the stock should not stop moving in the first 5 minutes of being open. That's not right at all. That's super weird. Okay. Let's see, GME's holding. Dow's down 0.3%, 0.4 if you round up. S&P's fine. Nasdaq's recovering. Excellent. Yeah, that was like, it was negative 0.5. Now it's negative 0.1. That's good. And we got something wrong with our volume. It is dead. She's dead, Jim. There's another thing to add to the soundboard. He's dead, Jim. He's dead, Jim. Fuck. I don't know what's going on here. Well, there's the buyers and probably no resistance from the sellers. There's a tiny bit of pushback from the seller. So when the buyers started, there was no pushback, and then they pushed back just a tiny bit. And if you look at the bid ask right here in the corner, and there's some heavy numbers. Let's get that up. Get this. All right. So if you want this number, it's right here. And there's also this here, which will tell you the high, the low, where it opened, and all that sort of stuff. I'm looking at the volume right here, so I need to just kind of scroll down. All right, time to get comfy. Yeah. It was such a good show. Hiya, Georgie. Yeah. All right, buyers, sellers, duking it out. So usually the first 5 minutes or so, it's a total free-for-all. So there's no way to predict, or patterns really don't matter because it's all just a big free-for-all death match, if you will. Which is why I'm just narrating the stocks, and we're just looking at the two sides fighting to try to get an idea of who's in the game today. So if this is buyers prime time and the buyers aren't doing so well, then we're looking to see if when the sellers have a chance to take over, are the sellers taking over? And that would show constant selling pressure or a strong sellers. But we just had 2 minutes of zero volume basically. So it's pretty odd. So it's showing that we don't have a market-wide sell-off volume. So it looks like we're pretty much unaffected by the stock market drop and the stock market recovery. Or we would see that in the price as a fundamental bottom line on the volume. We wouldn't be able to drop down to zero if there was a constant leak or a constant source of water filling up this imaginary bucket, right? So that gives us a clue as to what kind of day we're going to have. And the fact that they're slugging it out and they're going nowhere is decent, but you can see right now the volume is just nothing, with bursts of strong selling, strong buying. So this looks a lot like it's just like retail and active investors slugging it out, which means probably the real big money is just sitting and waiting. So the big fish that are going to play this stock today are probably not playing right now. They're watching, or the volume probably would be a lot higher because they would be moving stuff around and making a lot of splashes, if you will. So if that's true, we're going to want to see some green before 10:30 to try to entice them to get in and drive the stock price up. But they're probably sitting and waiting, so they'll either withdraw their money or don't take on a position and go somewhere else if we take too long to show green. And then that would play into the the classic pattern where if you go sideways for too long, you crash. It's probably what's going to happen here. A little too hard to tell, though. See, right now the buyers are pretty strong. And then sellers are really weak. You can see they're not even putting up a full strength resistance. So we're climbing. The buyers are still great. And sellers are going to magically just come up with a whole bunch of volume all of a sudden. Which usually happens right about the next penny up. Yeah, that's weird. I don't know why we have a big sell wall there. Or it's not really even a big sell wall, it's just people getting in at that price point. Maybe we'll get a surge of green. We just need a tiny bit, like 2 cents. We should get a boost from the green to our left and the red to its left. So we should be able to rocket right up if we can just get a little bit of energy, which we should be getting now, if you see the volume. Or, well, it's not the volume, the bid-ask volume, if you will. That's what, okay, this should push us up. This should be finally what we need. Damn it. Go away, sellers. There we go. Okay, perfect. We just pushed right through. Now, got a crap ton of sells, but we're still pushing it. Oh my god. Well done. All right. We need a second to burn through those cells. Now we're through the line. Good. Good. Yeah, this just, we broke through the line, so this is the pushback or the bounce. The buyers are weakened because they have to deal with the volume of sells. That's fine. And here comes strong buyer number 2. Push. Now all the sellers are gone. The buyers should be able to push right through. Come on. There we go. It hasn't updated the last price yet. No, it didn't register that push. Okay, here's another push. Okay. Now another push. There we go. Now it registered. What the weirdness? Last time it did that, it didn't show. Alright, that's good. Alright. So, looking at the technicals, we are completing a U shape now, so we get about another 3 cents if we can make it up that high. I think we should. The collapsing point is actually where the black line is. So if we do get pushed all the way back to the black line, we will probably roll. Just because it's both a resistance line and the halfway mark on the U shape. But we just broke over the shoulder. Now we need to break over the red, including that little tip, which might be hard to do, but the buyers are swinging pretty good. Not insanely good, but way better than they have been. Okay. Nope. That push got... Okay, there's the push. Ooh, the push just keeps getting crushed. Yeah, they're still hitting heavy. I mean, it's only 400 shares, but they're still hitting heavy resistance. There's 1,000 something. Yeah, this might do it. Nope. So this is us rolling at the top of a U shape, which is very common. Usually you get 2 minutes of a roll, and then you have a chance with the third minute to get a solid green. So let's see if the buyers come back swinging in the next minute. They're already pushing pretty good on this one. How much time's left? 18 seconds. Okay. 18 seconds. Buyers are still there. That was a bit of a drop there as we went through the line. But the volume, you can see at the bottom, is missing in action. So right now they're just throwing like 100 shares, 400 shares. There's 1,000, 1,500. Now they're going to push pretty hard. Yeah. That was a good push. They just have to sustain it. They come in with these huge numbers, and then guessing people are doing limits because it looks like a lot of those numbers are not carrying upwards. So they counter the red, but then as the blue goes up, it disappears almost unevenly. Well, on a technical side, we did just make an S shape. Really weird one, but we did it. Oh, well, we need about 2 more cents. Come on. I spoke too soon. We have to be the same height as the left shoulder. And this is the last minute to do it. We might get a push from this blue on the right here. Come on. Low volume's the worst. There we go. 1.1 thousands. Let's go. Push. Deliver that baby. Wow, RBC went down 60%? Holy crap. I know that they had problems, but why 60%? There must have been some type of no way. There's no way RBC could lost that much. And where are the circuit breakers? And it's not the Royal Bank of Canada, it's the RBC. Is it RBC? RBC? Royal Bank. Okay. Maybe it's RY. So they didn't show any type of no, they look fine. Yeah. Looks fine. There must have been a glitch in the matrix. Yeah, it's looking okay on my end. But yeah, I did hear something about it. All right, let's go back to where we are. Okay, so whenever you have indecision, you have a pennant. So let's get that drawn. So that's good. Breakout should be soon. Okay. So we're going to get some action in the next 3 minutes or less. Yeah, it's probably the case. Some big fish probably just liquefied his whole position accidentally, or it's a glitch. Because how do you liquefy 60%? Like there's circuit breakers and everything that would just step in and say, "Holy crap!" And plus, how do you even find enough people to make the stock go down 60%? Because if it's the after hours, there's usually not enough buyers if you're the seller. So it would have to be a glitch, or the market was so thin that they basically drove down the price because they liquefied, let's say, 1 million shares, 10 million shares. And so all the buy orders got fulfilled all the way, or sorry, yeah, all the buy orders got fulfilled. And then he drove the price down into oblivion because he was fulfilling all the buy orders and he just kept going down the list. I mean, that's possible, but that usually gets corrected the second the market opens, though. Yeah. Yeah. It could be someone selling a robot. But yeah, it sounds like a glitch or a fat finger trade. Okay, so 2 minutes and we should have some action. So we're going to see it here. All of a sudden these numbers are going to get big. And hopefully it's not this side. And then we will blow through. Okay, so our volume is now 5 million. So we're getting somewhere, but we're still kind of piss. We should be at least 10 million to 20 million. Excuse me. By 10 o'clock. But sad pandas. Okay, it's green. So we're trending right along the resistance line. So that's good. It's keeping us up. And we're getting real close to a breakout. Come on. One more friggin' cent, you piece of crap. I love when it follows a pennant to the T. It essentially just goes right to the edge every time, and it's like, you bastard. You just need one more cent and it would go for a run. Just 1 cent. But of course, stock market does not want to do it. It won't do it. Where are we now? We are slightly down to the right. Now we're at the halfway point. This could be a breakdown. Come on, buyer. Oh, look at the sell numbers. Look at how big they are. No. Come on, buyers. Come out of nowhere with the steel chair. Damn it. The sell numbers are huge. Look at that. 1.3. Now it's 1.5. Oh, and it just disappeared. That was the end of it. Okay, now here comes the buyers. Let's see if those sellers come back. If they had limit orders, we would see them right here. Nope, doesn't look like they're there anymore. Okay, good buying power. So the sellers are like definitely stronger right now. They're routinely giving out 800s and we're coming with 300s and 500s. Okay, now we're 1.3. Good. 900, we should push. 1,000, now we're pushing. 800. How the hell did we go down on that one? Unless these are buy limits. There we go. 1.1, so we push. Oh, it got completely eaten. There you go, 1.3. 900, push. 600, push. Come on. Jeez, these sellers are constant. We should be definitely going up. We got some pretty good numbers, but I guess the sellers in the background are just dumping. We're literally going horizontal on the chart. We can't get a penny. Wow, this is sad, pandas. That's why I don't normally look at this DOM. Oh, huge sell number there. 1.3 thousand, 1.4 thousand, 5.5 thousand. And we blew through it? Oh, there it goes. There's the impact. I was like, no way we blew through it. Oh shit, we did. Holy crap. The hell happened there? We just blew through 5.5 thousand worth of red. The chart must have adjusted. I thought we got pushed down, but we're going up. All right, well that works. No, oh, there's 7.2 thousand. There's some red. So what's going on in the background is that this DOM is actually like updating, like let's say 100,000 times a second, but we're only seeing it once a second. So the numbers aren't always going to line up perfectly because there's trades going on in the background. So we're just getting snapshots like once a second about what's going on. If you watch this thing in real time, it's nuts. It's like all over the place and it's flying up and down. Like it could go up 10 cents, down 10 cents, but if it ends up here where we see it, 956 at the second, then that's what we get on the chart. But I was expecting more resistance from such a large number, but we somehow blew through it. Well, fake order is going to get executed. This isn't level 2 data. This is level 1. So these are the last executions. If it's level 2 data, yeah, that's you could set up a buy somewhere and try to scare people reading the book. But a level 1 data means, oh, there's huge buy order. It means that this is what's being executed as we speak. Yeah, I know there is a tactic for like putting multi-million-dollar buy orders for people that read the books. But generally, the stock moves too quick for us to care about the book. Yeah, that's a huge 960, 9.59 has a nice wall. But our volume's so low that 7,000 shares is actually a wall. And that's a limit sell because see how it's still there? Every time we go up, it's still there. So it's not following us down. It's not a market order. Someone has a limit. See if we can get through it. Yeah. That's good, Mr. Vincent. Yeah. It's the hedge funds, yeah. Yeah, there's also another thing called like testing the water where you put a price to see how the market will react and you can take it off the book before it executes. But that sort of stuff is for people that have Bloomberg terminals and are more the market makers and stuff. It's not regular Joes doing stuff like that. Woo, woo, the volume. Okay, so I guess that person that was just waiting, that 7.7, I bet you that got flipped over to a market order. I bet you that's what that was. Okay, so as the buyers take over, then we should see if that guy's gone. Once we get back up, it's going to be a minute or two. So we did have a little bit of a breakdown. It got resisted. Then we had a little bit of a breakout, and then it got crushed as well. So we are going sideways. At least we're sideways at 2%. That's a positive. Okay, there's some volume. Okay. I think we'll probably, judging by this, we'll probably climb back up to 959 again. Likely with not too much resistance. If we can get the volume at the bottom there. And then we're going to hit that paywall. The sellers are getting angry. That's a 7. That's a 2. There's a 2.6K. What currency is a yuan? You mean yuan? A Y? So then you mean yuan, Chinese. Yeah. Are you trading on US markets or Chinese markets? Because Chinese markets is quite the roller coaster. US markets, meh. Yeah, that's real day trading. Oh, USD. Yeah, nice. Nice. USD. Yeah. You can also screw up the algorithms too if you got $1 million. Well, he's just managing money, Daryl. Seems like a lot, but none of that money's his, right? So he's got performance metrics and he gets paid commission, right? And then as he does better and better and better, he'll move up and get bigger accounts because, you know, it's all about the percentage. The amount of money doesn't matter. They just limit you to $1 million to minimize risk in case you decide to go south. And that's why you have to close all your positions by end of day, because then your screw ups are limited to, let's say, 30%, right? Yeah, exactly. Exactly. And when you have $1 million, if you get in and out a bunch of times, like a penny gets you enough for a car, you know? Exactly. Yeah, that should be the end goal for everyone, is to basically get somewhere to $1 million in a tax-free savings account and then just go to town in their old age. Yeah, because 1% of $1 million is $10,000. So a penny, or sorry, 10 cents of $1 million is 1 grand, and every penny is $100. Yeah. So yeah. No, I think I got that wrong. I think it's a yeah, because it's 1,000. So every penny, yeah, every penny is $1,000. Every 10 cents is 10,000, and every no, that's not right. Oh man, whatever. I'm really bad at math. Never subscribe to this channel if you want good math. I gotta look at the zeros. Okay, so a dollar is 10,000. 10 cents is 1,000, and then it's $100 per penny. Okay, now I got it. Yeah, you just put the decimal place right there. So $100 a penny. That is pretty fucking good. Yeah. Now, of course, it's not exactly 1-to-1, but it gives you a general idea. Obviously, if it's a penny stock and it goes up a penny, then you're obviously not getting 1%. But you get the idea. So you need basically a thousandth of a percent to get $100, and then 1/10 of a percent, so 0.1, to get a grand, and every whole percent you get $10,000, and if you make 10%, you get 100,000, and if you make 100%, you get a free million. There you go. That's the proper way to say it. Yep. Yeah, it's better to talk in percentages just because obviously the cash equivalent varies stock to stock, but percentage will hold the same across the board. But anyways, we're still trending sideways, and this is still just duking it out. GME is doing great. So GME's started off, kind of floundered a little, went into like a check mark, which is strong. Didn't quite make it. Hit the shoulder or the bottom piece of this, and then it basically tried to go down again, didn't, formed a large U or a really shitty W. So that's a good indication right there because it didn't go down. It could have easily just erased what it just did, and it didn't. And then you get the subsequent launch because that was a great indicator. So now we're at the shoulder of this guy and we're starting to roll, but the volume looks shit, so that makes sense. They don't really have the steam. The first resistance they hit, it's going to push them down until they get the steam to go up. So, and then we're basically in the same boat, but we've already collapsed. Hard to tell if we're going to go up. We got 10 minutes till we should start seeing the dip. So if we can't get any height, we're going to get dragged down. Wow. I can see where the negativity came from. They were doing good and rolled. Not so good, and wow. Look at the numbers. We're almost at negative 1%. What the hell happened? 1, 2, 3, 4, 5, 6, 7. So 10 minutes ago, we just took a nosedive. That's why you got to watch the watch lists. Yeah, that's going to put a damper on us. Well, that's pretty good. Considering the market almost is 1% down on the NASDAQ, which is a lot. The Dow's holding, but it's still about 0.5%. S&P is at 0.5%. We're doing better than I would expect then. Nice. Marsh. Sad pandas. Well, how the turntables. Yeah, the Motley Fool will say AMC sucks 1 hour, and an hour later say it's one of the best stocks ever. Zero, the ultimate dip. Good times. Yeah. It might. It might. We just need a change in volume. Whoa. Brutal volume. Gonna have to just rename this channel Volume Where Art Thou? Or Oh Volume Where Art Thou? That's what we should rename this. And George Constanza can be like, oh, I don't want volume. I'm just quickly perusing. I'm watching Trey right now in a side channel, and he's just flipping through his due diligence right now, going after the numbers. He's got his arms going. Oof, look at that animation. Yeah, I was just wondering. I'm like, I wonder what he's doing to fill the time if the volume's so low. What does he do to make up for the fact that there's nothing you can do except wait? But he's just throwing out numbers, getting all excited. Yeah, he is talking really fast. Like, holy crap. That is some uncontrolled ADHD or a side effect of medication, because nobody talks that fast. And he's doing a pretty good job. A total stream of consciousness, which is not bad. That's basically his neurons are firing off at the speed of light, which is an indicator of hyperactivity. Jesus, he has not breathed. He's still going. Man, this is pretty impressive. I could see it. But yeah. Anyway, so we're now coming up to the support resistance line again. So hopefully we get a gigantic W here. So we have the same 7 across here. So we should be able to do the same here. Here is the measurement. I like this one. So if we take this and we put this here, then yeah, we should be getting our breakout, like our other sided wall right about now. So, geez, he made $6 already. $15. Man. Wow, he is quite the entertainer, yeah. Punching his camera, cheering about numbers that don't matter. I see how he gets the fan base, He gets the energy going. Nice, nice. But, hardly talking about the stock, just going over the financials at the speed of light. But that stuff doesn't usually change that quickly, so it's not that important. It's important when you first look up a stock, but a stock doesn't just change course like in 10 seconds or a day. It's going to take months for it to course correct, even years. So our course correction was in January. So a combination of luck, support, whatever, and then AMC was on their way to turn around, and we basically put gas to that, and now it rockets. So I'm looking at his chart, and he's got a giant pennant. So he thinks there's a giant pennant going, holy, slow down your wiggling of your mouse. So he has a giant pennant coming from 5 days ago or so off of this guy. And he's making a pennant here. No, he's actually on the 6th month. He's doing a pennant off of these guys. There we go. Yeah. He's not wrong. There is a pennant there because there's indecision, right? There's no new highs and there's an increasing low. The only problem with his pennant is that this bottom here busted out, which kind of defeats it. Because if it was a true pennant shape or a wedge, this bottom breakout would have run, because that's not a short amount of time. That's almost a day and a half. So it's more likely that this pennant shape here has a different bottom, which is probably something like this. Because if it broke out here, we would free fall, right? So the pennant is more like that shape or wedge versus this. This is just a declining top, but even here, these tops, the lines don't work, so not very valid. But anyways, yeah. Did we finally break up while I was looking across the screen? We did. Excellent. So we got over the shoulder, which is 59. I'm just going to bring up the DOM because I'm curious about the numbers duking it out. So how do these people do the money in the chat? Is that just something you can enable with YouTube? I've never seen that before, except for these financial stocks here. Man, he's made over $56 with nothing but a stream of consciousness. Excellent. Oh, it's called fundraising. Okay. All right. I'll keep that in mind. Yeah, I don't use YouTube that much. This is all new to me. I have to, like, Trey's playing in the background right now, but I have to mute. Like, I'm not even listening to what he's saying, or I'd go nuts. I just want to see what how he's showing his charts. Like, you can't even read the numbers on his screen. So people, clearly, there's 6.5 thousand people watching him right now. You can't see his numbers. You can't see anything. So they must be just listening to his knowledge. And his chart is faster than my chart. Oh, it's because he's not on the minutes. Okay. His chart looks faster because he's on a smaller interval. Okay. I was just like, why is his chart going way higher than my chart? But of course, I can't see his numbers because... Yeah. Okay. So basically, this guy's just going over the basics like I do every couple days. He knows his stuff. Just his delivery. A little psychotic. All right. Cool. Well, nonetheless, one day we'll get up to 6,000 plus. Definitely like Trey better than Coors or the other guy. Ah, I see. Well, unfortunately, I mean, I'm still learning. We're always all still learning. But unfortunately, yeah, stock market doesn't work that way, right? Yeah, I know. And, well, we have our miner in here is only 17. I owe you a like, thanks. Oh, it's just hype and a sub. I think Trey knows his fundamentals, but how much fundamentals are you going to know as 23 years old, right? Like when I started trading stocks, I think I was 27, and it was 3 years after reading books. So if I was 23, you would have to start when you're 20. Like, go do all your financials and yeah, not to bash, but definitely you don't have a lot of life experience. But maybe he's been trading for like since he was 19, 18. It's possible. Yeah. Well, Tom, I don't see you running a successful YouTube channel. Yeah. It's not to say you can't, there's 18-year-olds that, change the world. But generally, financials aren't something you get into when you're young because you don't have the money, right? You need 25K to start day trading, and who has 25K when they're 18? So, yeah. Yeah. No, anyways, that's just my estimation, like just my ramble there, because yeah, in my case, that's the reason why I couldn't do stocks earlier, because you know I was spending the money because I was poor. It's hard to save up $25,000. You know, that's basically a car full price, right? Yep. It's all good, Tom. Stock market's the best way, and we'll get there eventually. Oh, Howard, you walked into that one. If he's 27 and got 3 kids, that's when the conversation just takes a look to the left. Hey, look, a bird. Yeah, and Elon comes in with the with what everybody's thinking. Oh, so you got 3 kids, a wife's boyfriend, which might count as a kid. You got to pay for all that. And he might have an ape chained up in the backyard. Uh, well, I'm looking forward to this channel picking up quality-wise. I'm going to spend some time. My health's been a little bit better lately, so I'll spend some time spicing it up. Because if total garbage can get the views, then we can do it here. We got this. No, Howard's too expensive. If you want to rent out Howard, he's at least 10 AMC shares. So, who's got that kind of money, right? Yeah, Belts knows it. He knows the drill. Actually, Belts is just here so he can harass me about getting a microphone. You son of a bitch. 10's the going rate, isn't it, Howard? Or have you upped your price now that you're a premium? Premium. Shit, what is it called? A premium voting right? No, a preferred. You're a preferred share. That's what you are. You're not just that common share. You're the preferred shares, Class A, or possibly B, if your company is ass backwards like AMC is. You give them the voting rights. Well, Belts, I was going to get a microphone, but then I gambled it all on AMC, and then look at where we are. What I just opened is caffeine-free Diet Pepsi. Since I can't have... Darrow. Yeah. Yeah, I was thinking of doing some teaching videos on the side, but I mean, there's thousands and thousands of videos, right? I would just be re-saying what everyone else is saying. What I should do is I should just go on Investopedia, read the page as a video. So that's what I should do. Just be like, let's talk about moving averages, and then just read Investopedia. And then that would build up my my search base. Yeah. Because I mean, if you just Google Investopedia, it's all you need. Well, I'm glad you like my voice. AMC can go up to any price, Dr. Overkill. It's just normally a company would not let the share price go up to 100K because then nobody can buy it. They're basically pricing themselves out of the market. Yeah, I think you nailed it, Backstop. Yeah, I'll put some more time into this channel. I want to get the people where they need to go before the hype is all over or everyone's broke. True. True. Retail dark pools. Exactly. You guys got it. That's all I'm doing right here. It's like the stock price is now 966 US dollars. You could use your eyeballs, but you're just here for that sweet, sweet voice with the molasses that just rolls off the tongue. Yep. Yeah. 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 That would probably be how I would do it. I would do like the school survival guide, but it's a stock survival guide. And then each of the episodes of the stock survival guide would just start off with like a 1-2 second musical blurb, the video clip, and then I just read the content, right? And then that makes all your clips, and then that gets you coverage on YouTube, right? So then when so when somebody says, what about moving averages? Then I can just link to the video, right? But yeah, there's a million videos that are going to be better than mine, but yeah, apparently that doesn't matter because people will consume anything. If it was fried raccoon buttholes, people would eat it. Or it's fried possum anuses, I think it was. Can't remember what George Carling said. Mm-hmm. So EENF is starting down red. Okay. NIO is probably going to recover. And AMC hit the upper trend and bounced. Let's see if this is a support line. And where are we? We're right here. Yeah, pretty close. There's that guy. There's so support line. Oh, hold on. This thing's can't use this. There's the no overlapping. There we go. I need them to overlap. Okay. There we go. They were moving as I was scrolling. So where the hell are we? We're down here. So it's this one. Okay, so nope. Let's go back to the 3-month. Okay, so we're right here. So there is a support line. It's the left side of the first major crash. And there's one here. But our main support's 907 to 930, 920. And then this one is 931. Okay, and that's also the floor on the 8th. Jesus, 10 days ago we were at this number. Christ, that is garbage. Okay, so there's a little bit of a bumbling support line there. But the main one is at 10, which we're not too far from. So hopefully this turns into an S shape. So we did complete a W, and then when we hit the shoulder, we broke out, and that was when I was looking at Trey's video to see what was going on. Yeah, I should try to combine the two. Stock warfare. Oh, it doesn't work that way, George. The float is still 200. No, 400 million shares. So there's no shortage of shares. The market maker is still loaded. So we are just waiting. We had a bit of volume there. So we're into the 1030s. So the dip right there. So it looks like everyone's going to ignore the dip. Yep. All right. So then we should see our recovery pretty soon then. That Dow looks promising. Got strong buy volume. Sounds good. I was just pounding down a fruit bar. Let's get the citrus in there early. Maybe plant a little tree. Get a lemon tree going here. Got to make sure it has nice dirt. Give it some worms. Really good ones. And maybe a nice shrubbery. Nothing too expensive. One with like a, a little gate. Oh, what a wonderful shrubbery. There, if that doesn't get the stock going, I don't know what will. I've heard everything from Carling as far as I know. I had a friend of mine over the other day that didn't like Chris Rock, so I got her to listen to How Not to Get Beat Up by the Police, and I'm like, oh man, that sort of stuff you can't play nowadays because people would get offended. But in the 90s, it was just like, just stop being so stupid. Now it's all like, my rights. And it was so good. Yeah. We do have an upwards inflection trend line right here. You can see it. Right? But we don't know if that's going to hold because it's, it's all mangly. So you basically, the stock wants to go here, and it's taking its time to do so, which is what we're seeing here. And it's going to try to hit it again, and then we're going to bounce, and then third time it should go through. But that's, a matter of if we can get this guy up, we should be post-dip. Unless everyone else is now starting to dip. Excuse me. If that made it to the microphone, that was pretty loud. They're all pulling down, so we might see a little bit of that. Might have to adjust the trunk a little. Get some more lemons in here. Evidently not enough citrus. All right. Yeah. Well, yeah. I mean, I probably haven't heard everything. He had 38 specials, I believe. But, I mean, and it all kind of blends together, especially like his stuff on, I think, Johnny Carson, I think is where he got his start. Yeah. Him and Rodney Dangerfield. But anyways, yeah, just a whole lot of the early stuff wasn't really as refined, but his late stuff was, oh god, he knew what he was doing. Because initially he was just telling jokes, and then when he figured out what sticks, and then he ended up being that guy, the counterculture guy, then all of a sudden everything started to get, right on point. And of course, then it's good. It's nice and refined. All right, so we're just waiting for this to burn out. We're currently 960, which is, I guess, both support and resistance. It was the number that gave us trouble back at 10 o'clock. So now it's supporting us. Yeah, it's not even worth thinking about Dr. Overkill. The only people that entertain those numbers are, I don't know, silly people, to use a lack of better word. Like, the AMC won't even let the stock price get that high. They'll split the stock price. Oh, that was Dan Carling. Sorry. I thought you said that was a mistypo. Sorry. No, I'm talking about George Carling. Sorry, I thought that was a typo. I was wondering why George Carling had hardcore history. I'm like, maybe he had a skit. I just don't know the name of the skit because I don't care. But okay, yeah. I think I've heard of Dan Carling. I don't think I've seen it, but I've heard of it. But yeah, George is good. Just like Jon Stewart. I can watch Jon Stewart any day of the week. Just so good. His writers were excellent. His delivery is excellent. The way he tilts his head, the way he pauses, his fake anger. So good. Yeah, same thing, Vincent. I could care less if we go sideways all day, as long as it's positive 3%. I would prefer if we go up. I want to get us into the U shape. I think we're outside of it, aren't we? Or are we back in? Yeah, I want to get to this U shape. So we're okay. We're in this U shape, but I want to get back into this one. So we would need to be about 1080 right now. So that's the U shape that gets us to 14 by 14 by 14 by the 24th, 21st. Let's see here. Can't remember exactly where that one gets us. So that one gets us to 1096 by the 22nd. Oh yes, it finishes this. So if we stay in this purple one, we're finishing this U shape, and that should approximately end on the 21st. If we were doing the other U shape, which it looked like we might be doing until we broke down here, that one would get us to 14 on the 22nd, and that completes the larger U shape. I think, though, we were doing the larger U shape, and that was the breakdown at the halfway or the corner piece. It's hard to tell if it's the corner, which should be down here, or if it's the halfway mark. Actually, there's one easy way to tell. Actually, why do I guess when I have digital measuring tools all over the place? It's this one. I always pick the wrong one. So, oh, I got it right this time. Okay, so if this is the bottom, the halfway mark is up here at 1058. So for that to be the halfway mark, the bottom would have to be way down here. Okay, so that's not the case. So if I bring this right up, this broke down at the 0.7 line. So it broke down at the 25% line, which is so fucking weird how this works out. Like it literally, there's the line and there's the pivot point right there. Fucking lines right up. And actually, if I adjust this properly, yeah, see? Right. Jesus, this box is creepy sometimes. And that's not even like a proper, not even proper here. If I do it completely proper, it's right along the bottom. Damn, that's creepy. Yeah, I don't know how this box always seems to work, but it fucking does. Yep. Which is why you can use this box. So now that you know it works, right? You can then extend the box, and then we can see where we are right now. So right now we're fighting just below the 0.75, which means we should probably get back up to 983 before seeing any resistance. And then our next major resistance is going to be 1050 and 1115. But I don't think we're yet trending upwards. We don't have enough power. So, because if we had enough power, I think we'd blow through all of this. We're well overdue for upward swing. Yeah. My tree ain't helping. Doesn't like its shrubbery. Alright, let's just... It'll have to take off eventually. It's all good. Well, I'm glad you like my analysis. I have to, analyze. There, that's English. A few times a day, just to make sure I'm on track. I like living in the micro, the minutes, but you have to keep looking at the macro because as time goes by, the painting continues. You get new information, right? And so I try my best to try to guess what the chart looks like in all the different levels. As I'm looking at the chart right now, I can see the bigger chart. But it's always nice to see the final masterpiece if you go back after a week and see what's changed. And then it confirms what you were thinking, confirms your projections, or tells you you're completely wrong. So Yeah, I think most of this channel is holding at 14, gang. I should change the title to if you're holding at $14, come here. I'm gonna do it. Oh. Okay, there you go. There, I changed the title to if you're holding at $14, come and join us. Let's see if the viewer count goes up. Ooh, very nice. Elon's gonna get a rocket ship to Mars. Time is it? We're coming up on 11. You should be seeing the increased volume in the last 10 minutes. That hasn't materialized. The Nasdaq's almost, well, Nasdaq just hit 1% down. So a pretty negative day across the market. Pretty severe too. 1% on the Nasdaq, 0.5, almost 5.5 on the S&P. Dow is 0.47 negative. And yet we're still holding. Kind of weird. Normally if the Dow tanks, we go with it. But maybe, just maybe, we've hit our proverbial bottom. So maybe this is supposed to be a really high up day, but we're getting held down by the market. Because if the market was shitting on us and we were shitting on ourselves, we would be crashing, right? We've already seen that at least 5 times. But right now, we're not shitting on ourselves, and we're beating the market's negativity. And so is GME. GME is almost up 10% or 9%. Now, what could be happening, though, is that market red could be specific sectors, and maybe the rest of the market, especially the one AMC is in, is unaffected or doing well. So it might be money relocating, moving around. But you do have some money being withdrawn. 1% of all the money in the, well, it's not true. 1% of the power of the money in the Nasdaq has been removed. Actually 0.78 to be accurate, and 0.85% of the top 100 has had its money removed, which is not bad. That's like negative 1% average across all the top 100 stocks. Still going to be a lot of money, but it's not horrific. Yeah, you got to keep things in perspective. Like 30% in AMC is nothing. 30% on the Dow would blow United States into a recession it would never come out of, or somehow make it the richest country in the world that I don't think it would ever recover from either. It's like if we ever saw 30 on the Dow, it would have been a machine error. So negative or positive. So yeah, you just have to keep everything in relative perspective. I'm guessing that's what's going on. So when we got the news of COVID, we reacted negatively. But perhaps, the news with all the vaccines, basically, I mean, the vaccination program in the United States is almost done. It's now a matter of just convincing people to get it. Supply is pretty much good to go. The the fear of Zeneca killing people, the odds are piss low, lower than birth control. So the initial warning was like, oh no. And then when you look at the numbers, it's like, oh, you're just making shit news. So I think all that fear that the vaccines were ineffective, that the variants were winning, or people weren't going to get the vaccine because it was killing people, I think that all just went away. Because that, I think, was Friday. Really, Friday was pretty negative day. Couldn't get any ground. So I don't know what's shitting on the market right now. I'm sure there's an article about it. But it looks like it is lifting slightly. NASDAQ is up 0.005. 0.004. S&P is up 0.003. Yeah, 0.003. And the Dow, same thing, 0.003. And we're coming up on 11 o'clock. See if 11 o'clock gives us a little bit of a jump. Oh, that reminds me. Oh, I need to do some option trading. I gotta write off my account. Give me a second here, just fighting with my phone. All right. Yeah, I want to write an option for my 4,000 shares I have, and then that will buy me enough money for a microphone. Because it's going to be at least a bit more time before we get up to 14. I think I have a bit of time. Okay, I have... Okay. Weekly. So the next one expires in 5 days. And I would get 9 cents on the share. So I'm just looking at the option trade right now, not looking at the chart. So if magic's happening, which it's not, going into the shrubbery, it is. All right. So it looks like based on the options, people are actually thinking it's going to go down to $9 by the end of the week. There's actually a heavy bet on $9 and a heavy bet on 8 and 7. So basically every dollar marker. 8 and 8 is 16. 16 doubled. Then going the other way. 7, 14, 14 doubled. Yeah, going the other way. 10 is pretty heavy. 1050 not so much. 11 even less. 1150 is like 40 cents more. Then 12 is 50 cents more. 12.50 is another 50 cents more. And then it's back to 40s. So there's a little bit of interest at 12 and then a little bit of interest for 10. So the two camps think at the end of the week we're going to be at $10 or $9. I think they're all wrong. Interesting. But of course, if you knew exactly the number, you'd be wealthy as shit. So I would like to write a call. Okay. I think I got this right. Yeah. Sorry for the little bit of sideways here. Just have to make an option trade and I can't really show you it because it's on my phone. Okay. There it is. So I want buy to open. Right. No, that's not right. Buy to open a contract, sell to open cover, buy to close, sell to close. Fuck, I hate TD's terminology. Maybe one of you guys know exactly which one I'm supposed to choose. So with my phone, no matter what I touch on the option chart, it goes to buy to open, which is not what I want. Or maybe it is. So This phone app's very professional, so they make it worded properly, but I don't think you can buy, sell, or open or close. Sorry, what I'm trying to multitask. So what it is, you can choose a bid or an ask contract, right? Or a bid or an ask put or call contract. But for each of those, I don't think you have 4 choices, which is what this thing is suggesting. So it's suggesting that I can buy to open, sell to open covered, buy to close, and sell to close for all of these. So I want to sell to open. Okay, thanks, Backstop. Yeah, that's what I thought. Yeah, because buy to close is me shutting it down. Sell to close is me selling my shares to shut it down. And then buy to open is purchasing the shares. No, it's probably pay the premium to open the contract. Okay. I think I know what I'm doing. Okay. I want to sell 4,000 shares. Apparently, I do not have. Did I click the right one? Oh, man. Yeah. So anyways, I'm not an option trader, so you can see that right away. Now, since you know what you're doing, Backstop, am I looking to it's a call, right? It's a call, and I'm writing a call. So I'm giving somebody the option to buy shares at a certain price, and then I'm going to write that price for the same price as the shares I currently hold. So basically, as I hold them, I collect the premium. And if I do have to fulfill the contract, I basically just hand them my shares at market price. The only risk is that if the stock goes up and over $14, I lose out on the possibility of making money because I have to give him the shares at a substandard price. But I don't physically lose any money. Yeah, that makes sense. I got this right. AMC option chain. Get this option chain up. All right. Yeah, sorry for the little detour here. The volume's garbage anyways, so there's not much to go on. These are starting to recover. So 11 o'clock, they boosted before 11, and then they did another one at 11:06. Okay. So for the end of the week, which is the 23rd, yeah, open interest. Okay, so there's a bunch at 510, 450. Okay. Wow. So there was I guess last week? Or is this daily? There's 10,000 people that are currently taking a 16% loss, betting on 11 bucks. And a negative 33% loss on 14, if I'm reading this right. Here, I'll send you a link so you can look at what I'm looking at. Wow, there's people betting it's going to be 30 bucks. Damn. So most of the options right now are for 10.50 at the end of the week and 11. Huh. So if you bet that it's going to be $19, it's a 5-cent bet. But if you bet if it's going to be $16, it's the same bet price. Interesting. So at some point, it's so absurd that the bet price basically goes neutral. Interesting. This weekly? Yeah, it's weekly. Man, who the hell's betting 30 bucks by the end of the week? It's a 2-cent bet, but holy crap. So people are betting, there's 1,271 volume and 5,000 open interest to take. I think the open interest means there's the amount of contracts available, and the 1,272 is how many have been gobbled up, or how many are written and how many are been bought. But Jesus, 1,271 people took that bet. Crazy. Well, yeah, so there's a glut in 14. Excuse me. All right. So if I would have done this on Friday, I would have gotten an extra 4 cents. Mm-hmm. What's 16? 16 is coming up as 0.5 here. Why are these numbers different than my numbers? Sorry for all the viewers here. I'm not giving you the most entertaining show. Just trying to figure something out. Yeah, we're just watching the Dow recover there, which is good. We're finishing a U shape. All right, and the stock likes the shrubbery. Da, 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 da. Okay. So we only have a 68% chance that we're going to hit 1050 by the end of the week. Or sorry, no, a 30% chance we'll hit 1050 by the end of the week. That sounds about reasonable. The 50-50 chance will be at $10. Yeah, okay. Yeah, on mine it's showing 0.60. It's 10 cents more on mine. Which is odd. And then it's showing 0.6 on stock twits. 1350. No, it's showing 0.9. ETC. Electronic traded currencies. Jeez. Oh, yeah, crypto. So if you got a $25 call and it goes up to $25, you'd make 160%. Damn, not bad. So maybe that's why people bet on the 2 cent. Here, actually, let me just flip this over. Here. I'm going to flip this over and go to viewer. There you go. So yeah, I'm just looking at the option chains here and looking at the odds. So there's a 10% chance, so the opposite of this, that will hit over $12. I think if we surge, we're going to surge hard, but definitely over 14 is like nil. That's going to be a blocking wall. But yeah, I was just looking at if it hits $30, so by the time we get to 30, we're going to double our money from this point. If you buy at any point now, you have double your money. When we hit 30 in December, that's not too bad. 2 times your money. Sorry, it's not double your money, it'd be triple your money. Because 100% is double, and 200% is double that. And then, so your grand total is triple. And I think stocks work compound, so you might be even doubling that 100 as well. So it's a 3 and a bit. Yeah. Yeah. Anyways, yeah. I just have a bunch of shares sitting here, and it was mentioned yesterday that I should do a covered call, and because I'm just sitting there, and I'm like, not a bad idea. But my phone won't let me go that high. I can only do it to 1350, which would cost me a 30-cent loss if it got called, which I don't really want to do. Yeah. So these are the puts. So these are the odds of it executing. So it's not looking too good. The odds are saying it's going down to 750. Damn. That's some grim shit. Yep. Yeah. Well, this is on mobile. I can set up to 16 strikes, and that's all it will give me. Yeah. So maybe I'll have to do this not on my phone. Actually, we have time. No, no, no. It was just looking at the options. The options are suggesting that it's going that way. Excuse me. I just got to move this for a second. Hopefully it doesn't affect your view. Oh, excuse me. Okay, there we go. I'm just going to load up the advanced dashboard. Okay, give me 1 second. I gotta go get my special card to bring out the big guns. This is where a wireless headset comes into play. Yeah, but at least we got a little bit of jump in the morning. Could have been worse. We started off low, then it just negativity piles up. As long as we're positive, then we'll kind of, the people that would sell under pressure, they don't. So we stay above, because once you go red, it just gets worse from there, right? So at least we got that before the market decided to, I don't know, go sideways. The S&P, the DGI, yeah, they're not recovering much. They've gotten a little bit better, but like that's nothing. That's 0.1, 0.2%. Let's see. Okay. Getting out the big guns. Dun, 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 dun. Okay. Here we go. So, here, I'm going to show you guys the big guns thing. I'm just going to hide my... I don't use this one because it's a bit of a hassle, but I'll bust it out for you guys. Okay, let me just set it up. Oh, we're not even on the right scene. Display capture, window capture. Okay. 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 Now let me just hide my account. Well, yeah, I don't know how to close this window. There we go. Okay. So is there any other thing that is... Yeah, I shouldn't be streaming this. Double checking there's no other account information. Nope. Not that you can really do much with it, but I'd rather not. Okay, so window capture. There you go. So that's the more of the big guns software here. So I really like this here, which is just showing you if it's going up or going down, giving you a general sense of things. Um, see here. This one's pretty cool. This is the heat map that everyone likes. So this shows you the landscape, if you will. So this is the Canadian landscape. So Shopify, the CEOs are all bailing. Basic materials apparently are going red, but generally it's not too bad. But let's take a look at the Americans. So Dow Jones. So the Dow Jones is half and half composited of Apple and Microsoft. It makes up 30% of the whole thing, it looks like. Here, let's get rid of that. There you go. So what's this stock? This AMC? Yeah, it's AMC. Okay. Both of these are AMC. And this will have proper volume. So let's go to the 1 minute. Let's get back to here. And frequency minute. So remember I was talking about how it goes insane? Just give me a second to show you what a by the tick looks like. And you'll see it's pretty insane. Dow Jones. So if we look at the whole US market, so Google, Apple, and Microsoft makes up a fifth of the US market. And then Amazon comes in with Tesla to make up another, I guess, 1/8, maybe 1/10 of the market. So really a lot of the reds are in consumers and tech. So Mew, Synopsys. Yeah, so it's just a general random. It's not too bad. Nvidia's 3%, Tesla's 3%. Who's this? Modena. Oh, Modena's taken a kick to the nuts. -5. Yeah. So anyways, this is kind of useful, especially if you just have it up on a second screen. And then when you start to see sectors turn red, yeah, you can probably get a free version of this somewhere on the web. So that's why the Nasdaq's going red. Tesla and then Nvidia and then Mu. Okay, so these are the ones that are really starting to weigh down. Okay. So that's what we're seeing the problem. And Modena is apparently in the top 100 of NASDAQ. So that one's definitely weighing it down. Okay, so all in all, the market's not too bad. Excuse me. Oh, just getting weighed down. Okay, so let's go back to here. So this is our minute chart, and I don't think I can... Yeah, I can't shrink the chart like I do the other one. All I can do is change the side expansion and zoom in, which sucks. But that's not what this is for, which is why I don't use this much, because it's kind of clunky. Let's see here. NASDAQ, Dow Jones. Okay, so there's that. Now, plus. Nope. Where is the add a window? Undock, show and hide. Right click. Here we go. I want to see the level 2 data, which is the order entry window. Nope, that's my bank account. I didn't get level 2. I turned it off. Okay, so the market depth would show you level 2 data. Yeah. Okay. Well, anyways, since that one's not currently set up because I got rid of that, let's look at the per minute. So if I do this, There we go. And then I go by the tick. So this is the stock as fast as the, like this is every execution. So you're seeing it as fast as the market can show. So every time there is agreed upon price, you're seeing the result show up here. But see how it moves around quite a bit, right? So when we look at it the minute or by the second, right, we see some number that's somewhere around 965. 965 is all the way from here to here. But this is basically all the executions. But you can see this isn't really useful because this data is it's too down to the wire, right? Where if we summarize what we see, or even at the 5-second, right? But you can see flipping between these, you're not losing too much between the 5-second or the ticks, which is like the absolute lowest. You can see the chart right there, right? So even though you don't have the down to the wire, you don't really need it. You know, it doesn't move that quick. You could even get away with like hourly. And well, this is 1 day. Give me the last 2 days. So you can look at the hourly chart, and that tells you pretty much what's going on as well. As long as the hourly chart keeps updating, then it's good to go. Let's take a look, since we're in the power mode, let's look at the last 3 months, and we'll look at the frequency measured in hours. Okay, so this is the crash from the 19, or 14, sorry. We can see the volume here is 36 million. Yeah, so 36 million in 1 hour. Then we've got a good amount of recovery volume. Yeah, it's not too bad. So we've had proper volume on the recovery, not too much on the retraction. Then it goes flat. And then the sell-off here has a bit of volume, but not much. And then it's countered immediately by the buy-in. And this one's half and half. No volume on the downslope. Good volume on the upslope. Yeah, that's actually looking pretty good. It's looking like there's strong buying power. The buyers more favor are more favored in the stock than the sellers. Yeah, that was 1 billion shares sold right there. 1.027. So 1.02 billion. That is nuts. Yeah, that really threw off our average for a bit. But we used to average around 400 million in a day. But now we're averaging around 35, 50 or less. And then there's that garbage week of watching paint dry. We were averaging around 22 million. Oh my God, that was so painful. Which is about the average for when no one cares about the stock. So that might be our just baseline market is around 22 million. And then all of this is hype. So when no one cares about us, we go back to 20 something million. Yeah. But looking at this chart, I can't draw on this chart, can I? Tools and markers. No, and it has really stupid stuff. Oh man. Yeah, this is garbage chart. How do I get out of this? It's good for setting alerts. And the chart does move properly, which is nice. But Ugh, I don't like this thing at all, which is why I don't use it. I was hoping to draw the U-shapes on here, but it's a bit of a pain in the ass. But I'm still thinking we're pretty good going here. You can kind of see the volume's kind of misleading, but we still can see it hold out. Yeah. Anyways, I'll go back. Oh, I wanted to see the option chain. Give me the option chain. There we go. That's what I wanted. Okay, single leg order. So option chain. Ooh, that's nice. Ah, neat. So there's the distribution, and this is the volume. So most people are favoring going to 950 more so than they're favoring going to 11. No, that's 10. So where are we right now? We're at 970. Interesting. So that's the weekly expiry. Oh, that's nice. This is useful. They graph all of the everything. So the intrinsic value only starts basically when it's less than market price, but there's no deviance. That's good. Oh, actually, there is. So, oh yeah, because as you go further out, you're getting more intrinsic value, I guess, due to the possibilities. Where's the flip over point? Flip over point would be right here. You're getting less intrinsic value. Oh, this is delta. Okay, that's right. I was like, that looks weird. Okay, that's a different chart. Oh, it's the calls and the puts. Okay. So if I want to compare apples to apples, it's this. There you go. So now it's the same. Okay. Okay, so there's the volume. That's the call and the put volume. Okay, now I know what I'm looking at. Delta is... Gamma is the time component, I think. So this is how much weight's given based on available time, I think. But anyways, this is useful. I didn't know it had graphs. That's actually useful. And then let's go down to 1 month. Yeah, that's pretty cool. So if you want to, I mean, even this little crappy chart right here is useful enough for you to make a decision. So 1094 by end of the month is a given. Yeah, cool. All right, let's see the option chain. How far does it go up? Single leg order option chain. Okay. So if I want to sell at 14, okay, that's this bad boy. So it's 0.7 here. So if I want to, and it's 0.8 if I want to write. Yeah, that's not the right one. Okay. So let's just get this off the screen. And I'm going to place an order here. Whomp. And blump. Okay. Give me a second here. Oh, we're getting a surge. Excellent. Sorry for all that. I'm just going to place my stuff. Yeah. So we just completed the U and we broke out of the resistance line. So that's definitely what that was. So not bad. So 12 o'clock is usually the high for today, the day. We did get a sudden surge of volume in the last 4 minutes. And that looked like it was all us. GME didn't care. Oh, speaking of 69, so the Summer of Love was 1969. And I don't know if it was just because 69, but I never made that realization. I was like, oh, well, there you go. Okay. So I want to do sell to open cover, right? If I got this right. Mm. So yeah. So I'm just looking at the option. So it's a $60 commission for the option, which is friggin' expensive. I think it's 30 on my phone, but that might be one direction. Excuse me. But that will give me $260 in my pocket. If I flip that to end of the month, I would make the same amount of money. That's because that's not right. Let's see what end of the month would get me. Option chain. Yeah, we're up 4.07. Volume's getting better. So 14, I want to see end of month. Where is end of month? So that didn't last long. So I was expecting 3 hits. That was the second hit. So we weren't supposed to go through. So let's see if we get a third try. And then that time we should make our way through. I'm just looking at the dashboard here. Oh, you guys can, yeah, you guys are fine. Just seeing what I can do here. There we go, found it. So there's a toggle. So the next monthly is the 21st of May. And then there's 2 weeklies, the 23rd and the 30th. I think we're going to be up to 14, quite possibly by the end of the week. But I think we'll hit resistance and we'll go back under 14, even if we go over it. Yeah, so I think it's actually a pretty good gamble. Yeah, basically loan out my shares. Okay. Oh, yes. That's what I wanted to do. I wanted to see the price difference for loaning them out for 1 week or 2 weeks. If it's an insane price difference, then I will I'll just do 2 weeks. Oh, it's about a 20-cent difference. So do you think it's going to be $14 by the end of the month? Yeah. I would probably put good money on it, it would be. Yeah, I don't think I'd make that bet. I should, when I get my money out, I should do a bet to December 2021. And I wonder what a $30 bet on that one is. Let's take a look. So if we go to 2021, April 30th, so it would be, it's currently around $1.77. Well, that would be your handle. This is going into an S shape, and that is good volume. You are correct. If I minimize this chart and I look at the chart, that last volume day, 1 day, that last volume was, it won't tell me, about 500,000. Yeah, just over 500,000. So all the other volumes have been around 165. That one was 465. But there was also another purchase. This guy here. This one here is the same size. So on my chart, it doesn't show them the same size. But these two are the same size. That one's 471,000. And this one is 476,000. I may have said million a second ago. Yeah, oh, 500,000. Yeah, that's what I said. Okay. So anyways, these two are the same size. It's because I'm using the Chloe. The Chloe guesses the volume by reading. So it can be thrown off. Whereas the other thing I just showed you is a paid tool. Yeah, it's doing the S shape. And the S shape is a power shape. Now this is not so great, but if it can get a little bit of umph, then up, 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 and away she goes. Oh, sorry. I keep forgetting that window. Just making sure I got the right technologic or the right terminology before I get fucked up. Yeah. Yeah, so writing a call option technically has unlimited loss. Because I can't close the contract early, although that's what that guy was talking about. Said he could just close it down early. Is anybody here more versed in option trading than I am? Oh, so I can close it early. Okay, so basically if the stock, so American style options can be exercised at any time. I guess that means then the writers can close it at any time. Replace them. So if I'm selling a covered call though, I would just, by closing the contract, I would just give him the shares at $14 if he wants them. Then what's stopping every option writer from killing their option the second it starts losing money. Okay. So basically, to close the contract, I'm not actually closing the contract. I'm selling the remainder of the contract's time back to the market. So the market maker who gives me this contract will take the contract back with a delta applied to it, and the delta could be in or out of my favor. Okay, that makes sense. Because options in the European model, they run to completion. Nobody gets money until the final day. Those can't be closed. They can't be closed early. And I bet you there's also no market maker there. Those options are probably purely bets between people. That makes sense. But in the US model, the market is run by the invisible hand of Citadel, and basically they make a penny off of every trade. So they don't care. Because basically it all comes out in the wash. Because I'm guessing for every contract they write, they probably make a corresponding contract that gets them net zero, that nullifies it. And they might even sell that one too, right? And so at the end of the day, they just made 3 pennies selling each side. So if everybody dumps everything back, it goes to zero. If they don't, then individual people take their losses, and Citadel keeps their premiums, their little sub premiums. Yeah, that makes sense. Yeah. Okay. That makes a little bit more sense. Yeah, because all the books I read always talk about options not being able to be liquid. And then every new book that's American, options are liquid. And then you're like, okay, but it completely changes the game. If you're trying to, you don't need to care, right? Your risk is technically minimized. Whereas if the stock goes wrong, you technically take unlimited loss, right? Something like, you write a European style option and it goes up and goes up. There's nothing you can do. So, yeah. Okay. So that makes sense. So it's the market maker's problem. He'll take the unlimited loss, but he has a corresponding option. So it really doesn't affect him, which is really what people should do with like iron condors and stuff, where you basically bet both ways, but then you'll still lose the premium because the market maker will screw you on the delta distance or difference between the puts and the calls. So you're going to lose a little bit. But that's the idea of insurance. If you don't know which way the market's going to go, but you know it's going to go poorly, you buy both directions. You pay like $100 in insurance, and then you close the one after you know which way it's going. Hence, hedging. Okay. Yeah. Yeah, I understand options. I just don't understand options, like how to execute them. Okay. Okay, well maybe I'll take a stab at this. So I would do buy to open, means I'm getting a contract. Buy to close means I'm buying a contract to close my contract. Sell to open a covered contract, and then sell to close a covered contract. So what's the difference between buy to close and sell to close? Just out of curiosity. I'm guessing one is, these are all puts, or sorry, these are all calls. So you can buy to close or sell to close. So buy to close is exercising. Sell to close is using cash in lieu of shares. Or buy to close might buy from the market and then close your position by providing the person the shares. Yeah. Help me out here, backstop. Yeah. Let's see here. So this is the order that they're done. You buy, open, close, sell, open, close. Okay, so open covered, and then you close. So that's the bid, open, close, and the ask, open, close is what that is? Okay, then what's sell to close? Yeah. Okay. So then buy to close is to close a covered contract that you wrote. Sell to close is to cover or finish a buy to open or get out of it. Okay. Now, how do I exercise a contract? I just let it go right to the end then if I want the shares? Because I can't exercise early for shares. There's no way for me to pull shares out of the person. Okay. Okay. Okay, that's where I was getting confused because I thought you could exercise early. I know you can sell the contract back to the market. That makes sense. But I thought you could choose to exercise early. So you're just like, you know what? I know it's worth almost nothing, but I want those shares. So you could pull them down, but it's not letting you do that then? Okay. So if you let it go to the end, it exercises. Or you can trade it back to the market. Okay. And that's why that other stock hedge guy, he always closes them so that they don't try to pull the shares out of them. So he takes like a 2-cent hit, but then he closes them down before they get to pull the shares out of them. Okay. So that's what I have to do as well. So I loan out my shares, and then as it approaches the number, I close at potentially a loss greater than my premium, or I let it go above that point and but my loss is limited, right? Even though you technically have an infinite loss, it's an unrealized loss because I can only lose my shares, right? So I give them all my shares. Oh, I guess then I lose 100% of my money, right? Oh, yeah, I do. No, does he have to? Oh, no, he has to buy them from me. Right. Okay, hold on. I'm getting this wrong here. So I would lose 100% of my shares, but he has to give me 100% of the money. So as long as I'm trading the shares for the same price as I bought them, my loss is limited to that. Yes, unlimited loss of unrealized gains. Yes. Okay, we're on the same page. Okay, I think that's the part that was confusing me. Because they're like, oh, it's unlimited risk of unrealized gains. But if you sold a naked call, then you're fucking screwed. Okay. Yep, yep, yep. Yep. So technically, then if I bought them at 14 bucks, right? I could sell them to the guy at 15, right? If it hits 15, then I make my money. If it doesn't hit 15, I end up with the premium and nothing happens. The other guy loses. So maybe I should set my shares to something unreasonable. Like I'm only getting 8 cents a share for 14. But if I set it to 15 or 16, which I don't think we're going to hit till next month, I can get an extra 2 cents per share. Ah, okay, okay. I kind of get it. It makes sense more when you're talking about. It makes sense when we're talking about commodities, right? I have wheat, and then it's like, okay, well, I could sell the wheat now to the market for $4, but I know in December wheat's going to be in demand because there's going to be a bad winter. So I'm going to either buy the wheat at a locked in price now, which is buying a call, or I'm going to sell my wheat at some astronomical price, like $20 a bale. Somebody might buy that, and if they do, I just owe it to them. And if it goes to $100 a bale, I lose out on the profit I could have sold to the market because I have a contract to give it to them at the high price. But I physically don't lose any money. It's just unrealized money because my hay bales. Right. So if you write calls that you're willing to part with, then there's no money lost. You either get the premium or you get the exercised cash. Either way, you're not out anything. Nice. Okay. Okay. Yeah. Okay. I think I got this now. I'm a little. I'm building up my confidence on connecting the dots here. Yeah. Exactly. Yeah. That's the only problem with the books is that they were written in a time where options existed, but they're not like today. Although they haven't changed much since I think the 60s. Or whenever we went digital. But anyways. Yeah. Okay, so then really what I'm looking for is to probably find the one with the most price per, and I think that's theta, right? Theta is the most valuable one. Oh yeah, but she'll come back down. Yeah, this stock's not going to just go up to 30 and never come back down, right? But yeah, exactly, exactly. So what's the Greek that measures? Is it rho or theta that measures value? One of these bad boys does, because like if 14 sells for 6 cents and 18 sells for 20 cents, there's more value in selling at 18, right? Because you're getting more for less risk, more money, right? So what's that Greek? Does anybody know? Since we're doing a learning lesson here. No, the Greeks. Yes, the Greeks are all different factors of the price. So delta is the how much it moves per unit of price motion, how much the underlying thing moves. So if it's 0.5, then the strike is going to move up 50 cents for every dollar, kind of like that. Yes, yes. But okay, I can quickly Google them. Give me 1 second, since my viewership is already in the trash can right now, I bet. So we'll just go here. Greeks in options. Okay, give me the Greeks. Okay, we got delta, gamma, theta, vega, and then there's the new one, which is theta and rho. Theta's here. There's no rho. Okay. So changes in volatility against time is theta. Theta is the time decay of an option. So the further out you go, the smaller the time decay will be for an option. Okay, vega is volatility. It's the sensitivity of the price to changes in volatility. Okay, so it's how much it moves, but it doesn't always move equally. An increase in volatility will lift all the prices of the option, and a decrease in volatility causes all the options to decrease. Yeah, but each individual option has its own vega. Yeah, they all move a little bit differently, and that's where you can make money, by hunting down the ones that don't move properly. Yeah. Okay. Now, minor Greeks. Okay, there's lambda, epsilon, vama, vera, zama, color, and ultima. Oh my god. Where's theta? Option theta. No. Options. What's this one? Rho. Rho is the rate of price derivative changes relative to the change in risk-free rate of interest. Oh, okay. Rho is against the interest rate. Sensitivity against interest rate. Oh, okay. So not very useful unless you're hardcore. Okay, options, and then gamma should be time, based on a single point in the delta's price. Right. Okay, yeah. And then delta is, yeah. Whoa. There's a little, sorry, the chart just went like flipped on itself. Okay. All right. Back to this. Yeah. Yeah, you're quite right, Daryl. Ah, thank you for the summary, Backstop. That's actually quite good. Nice. Oh, so you're using delta as the likelihood it would expire in the money. Ah, okay. I thought delta was the measurement of how much it moves with the change in stock price. Okay. Learning something here. Okay, so let's get me some beer money then. So it's a Monday. Let's take a look at the option chain for the end of the week. So if I go to the end of the month and I say $15 this bad boy, I'll get 17 bucks. Okay. So if I do 1 week, I get $8. If I do 2 weeks, I get $20. So it's better to probably do $20 or $21, but then move it away from wherever I think the price is going to be. So if I think it might be $14 by the end of the month, but I wouldn't feel bad parting with it at 15 or 16 because we could come back. Oh. Okay. Yeah, okay. So you set okay, I see what you're doing. So basically you have to kind of gamble the what price are you happy with losing it? And what price, like say you set it to 20, right? If it hits 20, we're going back down to 15 because the only way we would get to 20 is by hitting the NOS, and then we'd have to have a retraction, right? So, okay, so I can use my stock skills against options because the likelihood, so as a momentum trader, which is what I'm good at, so the likelihood of us going past a certain point without having to go back, that would give me my safety net. Because you don't want to bet on something like $7, and that's a number we might hit one more time, maybe, and we're never going to see it again for the next 20 years, right? So you don't want to get fucked and then have to buy at a higher price, right? But if you're doing it the other way around, you just have to make sure you don't preemptively sell at a price and then have to pay to get back in at a higher price. Yeah, okay, I got this. That's an easy way to do it. Okay, sweet. And then I can use this money to buy more shares. I like it. I like it. Okay, so I can do $14 at the end of this month, and that will get me 21 cents, or I can do 15 and that'll get me 18 cents. Yeah. You're right. But the odds of us having a short squeeze is nil, right? Oh, look, it's pretty simple music. Thank you for visiting us. I saw your comment on Trey or Matt Core. No, the stonks. Anyways, I saw your comment. You traitorous bastard. I thought you spent your time here. Okay. So, end of the month, 2 weeks. I mean, we can go up 30% in one day, so maybe I don't want to bet out that far. But I could set it absurdly, like $27, and I'd get the same premium as if I was betting. Yeah, okay. So that was the big question I had about options was basically how do you weigh out the value? right? Because the option is based off of, the option's not in your favor. No matter how you slice it, the option is negative. You're not winning. But just like paying commission for a stock price, you're losing $10 or whatever your commission is. So you never actually win, but you can have a huge delta, which gets your money, right? So stocks are inherently making money for the market maker. But I think I see it now. If you're using your foresight to guess how the stock market will react or move because you know the stock so well, you can either try to time the price, or in the case of covered calls, you can basically get as close as you can to the price, but no higher. And then for the other side, you're betting as close as you can to the price or higher. So you're guessing the lowest it will be. And in this case, I'm guessing the highest. Yeah, okay. So you can think of it that way. And if you do know how the stock moves, then you pay a premium and you're wrong, you lose your premium. Or you write a premium and you lose out on unrealized profits. And that's the two sides. Okay. That makes a lot of sense. So the real value comes from you being able to weigh out likelihoods against the ask price. That's where you derive value. Yeah. And then you can compare the ask price to make sure you're not getting ripped off with Vega and Delta, because you can technically look at Delta and say, okay, it's up because of this. Do I really want to pay the premium? Or do I want to wait one day that it's negative, or find another price that has less interest and then use that? Because that's where you'd find your deeper value, if you will. Or, like a stock trader, just buy at market. Who gives a fuck? 10 minutes from now, it's up $1, right? So it's like, yeah, you can nickel and dime and get the best price for the penny using a limit order, or just get in and who cares? And same thing with options, I guess. You can just get in and who cares if you just pick absurd numbers, right? Yeah, yeah. I think I got this. Yeah. Yeah, I could do that. But, like, what's the likelihood that at the end of this month it's going to go $30, right? Yeah. Yeah. I mean, there is a chance it could be $30 by the end of this month, but those odds are so low. But honestly, are those odds worth the premium? Not really. I'm only getting like $500 for the chance of missing out at $30,000, right? So you're almost better off buying calls. So just throwing down $300 every month, betting that it's going to go up to 300, or sorry, 30. And then the second you get a squeeze, you're fucking laughing, right? And I guess that's what people do when they do a lot of the option traders, which is why it's a lot more like gambling, right? You're basically just throwing out $500, $600, seeing if it sticks. And if you're wrong, you get zero. Yeah. Yeah. No, my gut does not say squeeze. I'm just trying to make sure I understand this before I pull the trigger, but I think I'm a lot more confident. Just give me a second. I got to use the washroom, and I'm just curious how many people are still watching this stream. 22. Yeah, we lost a bunch there. People really like hearing me talk. Yes. Yeah. But if it was a stock that didn't have all the Reddit interest, then you also don't, you probably don't have the premiums because there's no demand. Yeah. Alright, sorry, I'm back. Oh. Oh. Now there's can you do options on crypto? Because that would be one hell of a bet. Just put a call and just, pay the $100 lotto ticket. Like, you could probably, yeah. If you can close at any time, so if you had to guess the exact price Dodge is going to be at Christmas, it'd be really hard. But let's say if you just say, is it going to be higher or lower than now price, right? So you can basically just, I guess buy Dodge at that point. But then the option, you could multiply your money. If you're planning on buying it anyways, you could just buy an in the money call for like right at your feet. Or no, just right outside of the money, I guess. And so you buy right at your feet, and then as soon as it starts to go up, then you're laughing, right? Yeah. And then if it does somehow go lower than where you're standing right now in a year's time, then you basically just lose your premium. Yeah. So that's basically like no risk. You'd pay the difference in the intrinsic value out front, so you'd get hit pretty hard if it comes down. You'd lose an immediate dollar and then the premium. But you're covered, right? That's all you're losing. So, yeah, that wouldn't be too bad, putting an option out for a year. That's not a bad idea. All right, let's get back to the real chart here. That looks like a moderator that was posting stuff. Nope. Okay. Now we're back. So, in all that time that I was talking and looking at options, nothing happened. Good times. Yeah, utilization doesn't mean anything. Yep. And then tomorrow, there'll be a different number. And then a different number. All right. See if I can figure this out. Da, 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 da. Yeah, the volume's definitely slowing down. How's everyone else doing? Yeah. Same old, same old. Sideways day. Okay. So I have to choose between the end of the week or the end of the week. Or I can go even further and pick a higher price. So for a person doing a covered call, is it more beneficial to do short or long? I know when you're buying a call, the longer it goes out, the more you have to pay in premium because there's more of a chance of you being right. So as the writer of the call, I'm taking on more risk, therefore I can charge more, right? Even though technically I'm not taking on more risk, but yeah, you're taking on more risk of losing unrealized profits. Yeah. Okay. So I wonder if I set it out, let's say 18 days from now, and I say sell it for $20 18 days from now, or $22, I'd get 18 bucks. If I sell it for, okay, if I sell it for at 11 days, I get 7 cents. If I sell it for 18 days from now, I get 18 cents. So there's clearly a huge value difference for the difference of 7 days. But I could sell, yeah, you could either sell cheaper to the like closer to in the money, or go further out on the time scale. But what's the odds of us hitting 30, $29 in the next 18 days? Like, that's unbelievable zero. Like, even if we squeezed, right? We had a squeeze already, and the best we could do was $26, right? Yeah. And I guess there's nothing stopping me. I could technically buy in while it's going up. I'm just going to lose money when it goes over. Yeah. Basically, the question is, how long do I want to have my shares locked up for? And is it worth the premium for that lockup time? Yeah. Yeah, well, especially depending. Like, so if I look at, if I say do a really shitty one, so $10, I think the stock price is going to be less than $10 in 18 days. That would be absolutely stupid. That one will get me almost $1, right? Because it's so damn close. Yeah. Oh, do you have to find a buyer, Howard? Or does the market maker just take it? I would figure that the option market's quite liquid. Okay. So there is a chance you'll be stuck with it. And if you're stuck with it, then yeah, I can agree with that overkill. I think even best case, we're going to go up 30% in a day. We're not going to blow past 14. Okay, okay. Okay. So, yeah, exactly. That's what I'm looking at right now. I'm debating writing one for this week is pretty much useless. You're not going to get much out of it. So taking a little bit more absurd position. So instead of writing one for the end of this week, say to $14, I won't get much money. And the odds of it going to 14 are nil unless there's a squeeze. If there's a squeeze, we might be able to go up to 20 bucks. So what I should do is write the option for the height I think the squeeze might be at. with a reasonable time frame so that I don't lose, I don't miss out, right? So if I think there's a possibility of a squeeze, or at least a massive upsurge, I think we could get over 14. If we just had like a really fucking good run, we could get over 14. But the likelihood is very low. Okay. So this is why option traders are always constantly asking, what's the price going to be at the end of the day? What do you think it's going to be at the end of the week? Because they just want a second opinion on their bets. Well, helps me understand the broader spectrum. I still like my stocks. They're very simple. Just buy, sell. But it's good to have something in your tool belt if you're stuck, right? I mean, options are there for hedging. That's exactly what they're made for. All right, let's go do one. If I do one for... Okay, so if I do one for $16, no. Yeah. So if I do one for $16 in 11 days, we'd have to go up $1 or more every day. And the odds of that is quite low, but not impossible. But if I sold all my shares at $16, I wouldn't be mad. Because the worst it would go up is probably 18, 19. Oh no, $50? No way. We had a full-on squeeze, and we didn't even go over 30. I think we were 32 maybe. No, that was a full-on, like, you would have to, yeah, I don't even think, yeah, no, you would have to really get people caught with their pants down. We are technically about 100% higher than they were previously. So we are going to jump up higher numbers. But as you go higher and higher and higher, the purchasing power becomes less. So it's easier to squeeze lower numbers because going from 1 to 2 is double your money. But if you have $1 and now you have $2 in your hand, the purchasing value of that money isn't much. If someone said, give me $1, I've doubled their stock, right? But it didn't hurt me, right? But if it goes from 100 to 200, it's still the same amount of doubling. But if you asked me for $100, I wouldn't give it to you, right? So the squeeze is less pronounced, I guess, at higher rates. People are quicker to get out. Damages hurt faster. Interesting. Interesting. Well, gives me something to think about. And if the whole market goes to shit and drags our stock down, then I just get the premium and laugh. Now, do I gain any money, or my maximum I can make is just the premium, right? I would have to write a put, or no, I'd have to buy a put if I think it's going to crash, right? And if I do that, I have to have all that money in reserve, or I can't do the put. Right. Okay. Think I got this. Now, if I was a shady bank, I would allow you to use the value of your shares as per current market price. Because if you had to back up your losing bet, you could liquefy your shares. Yeah. Yeah. So if I buy a put price right at my feet, that allows me to sell at that price. So technically, I could buy a put at $14, pay out the ass premium, run it to expiry, and then I could get out my shares, loss premium. But as it goes further and further down, I'd make more and more money on that contract. Could do that too. And then I think my bank would accept that because the maximum I can lose is the premium. And then the shares would only gain value or expire worthless. That might work. So if I'm thinking it's going down, I could leverage my shares as collateral and then bet at the higher stake price or strike price. So what's the disadvantage of doing that aside from paying an absurd premium, right? But does it matter if you pay an absurd premium? Because if it moves in your favor, you'd be making a ton of money, wouldn't you? Oh, but I guess you have to cover the premium. So then you'd have to do the math to figure out what the minimum change is required for you to break even, right? Hmm. So are you better off? Okay, so yeah, okay. So with it, those would all have intrinsic value basically, because they're all in the money at the moment. And the farther you get away, the more it would be plus premium, premium on the premium. Yeah. So if I sell a covered call, I'm saying I have the right to, I give you the right to buy my shares at this price. And as long as it matches the price I originally paid, I don't lose any money. No principles lost. I can go the other way and I can give you the right to sell your shares at a certain price. And that means I got to buy them, right? So if I write a put, I'm going to have to pick up those shares unless I close early. So if I don't want the shares, I would have to close my position early, presumably with a delta that moved in my favor. That then beats my premium. Else, I lose the premium, is my maximum loss. Oh, no, wait. My maximum loss is I got to buy the shares. So I got to close. Oh, shit. Hold on. My maximum loss on writing a put would be I would have to buy the shares, but then I could just let the contract go. And no, the worst case is he would be able to buy at whatever price I set. So I would lose an immediate delta from wherever I bought to the price I'm selling. Or if I was planning to buy from the market, I would lose or gain based on the delta. Okay. So if I wrote a put for my shares that I currently have a price for, I don't lose anything, but I might be giving away my shares. No, wait. No. Ah, shit. If I'm writing, I'm buying. Okay, I got this backwards. Yeah. If I'm writing the buy, then I'm giving somebody the ability to buy shares at a certain price. I have to provide those shares. So if I have them at $14, I give you the right to buy them at $14. You're going to, no, right to sell them at $14. God damn it. Okay. So I give you the right to sell them at $14. I'm going to have to take them, right? So then I need to have the money. I have to have cash. That's what I need. Okay, so I have to have cash, not shares, in place to back that written call. No, put. Okay, there we go. I think I got it there. Okay, so a covered call is shares, and a covered put is cash. Yeah. Yeah, that's $13 a year from now, or 6 months from now. Analysts don't, it's not a price target of $13 today. It's always future looking. I'm giving it a $30 price target by Christmas. I could just bet straight up and say I think it's going to be $30 by Christmas. Yeah, I guess I could do that once I get my money free. And if I don't want to own any shares, I can't write put, but I could buy a put. And I buy a put at $14. If it goes down, I make money and I give them my shares at $14. Okay, so I could do that too. If I really wanted to exit the market, I could buy a put for the same price as I got the shares for, and I'd get all my money back because that cash has to be given to me, basically. Yeah. I get that. I'm just trying to responding to you, Backstop. I'm just trying to wrap my head around the whole thing. When I learned options, it was always moving cash around. But now that the idea of holding shares, it was throwing me a little bit of a loop. Yeah. Now I'm just trying to figure out what my options are. Well, literally what my options are. So if I ever needed to like exit the market for some reason, like I knew something cataclysmic was coming, but my money was stuck, I could take out a put, or sorry, take out put. So buy a put for the exact same price that I got stuck in the market at. When it goes worse, then I make money. If it comes all the way back, I lose my premium. If it goes above, then I give them my share. Or no, I have the option of selling my shares. I don't have to sell my shares. So if it actually goes above me, then I can just sell my shares to the market. Right. Well, that might be useful. Maybe that's what I should do. Buy a put for $14 if I think it's going to go down. I guess I could do that. But I wonder how ridiculous the premium is. Does anybody ever do that backstop? Buy a put at their, like, 'cause, yeah, I can see doing a covered because I'm giving somebody the option of taking my shares if they want them. But then if you go the other way, I can use my shares to bet about going down. And all I got to pay up front is the premium. And then my shares, because they're locked in at that price, I can use my shares as collateral because they'll be worth the exact same amount minus premium or more if the option goes in my favor. Yeah, I think I'm right on that one, actually. I'm just going to take a quick look. If anybody that else is in this thing, they could chime in. Yeah, we got a healthy 26 people. I was expecting it a lot lower after that. Yeah, I think that is the insurance model because when you buy either a put or a call, when it goes out of your favor, you essentially you just lose the premium, and that's the insurance model, right? So for a call, when it goes above the price that you want, or you strike at, you make money. If it goes below, you lose premium. A put, when you buy one, if it goes below the price you struck at, you make money. Goes above, you lose the premium. The difference is between the calls. The covered one is unlimited unrealized risk, and the other one can only go to zero. So that one is limited unrealized risk. Except that one is in cash. So I guess you're just missing out on money you could have made with that cash. I guess. Right? Or is writing a call option unlimited financial risk? Maybe that's the dangerous one. Because you're holding cash and you're giving that person the right to sell and you have to buy. Yeah, maybe that's the dangerous one. No. What, you don't know how to sell contracts? Buying a contract is easy. Just hit the buy button. Oh, you only know how to buy contracts. I misread. Yeah. Okay. Interesting. Yeah, there's a little bit of delay, Howard. And we are sideways as shit. It's 1 o'clock and we haven't fucking moved. GME hasn't moved. Dow, NASDAQ. Ugh, what a boring day, eh? Oh, at least it's a good day to try out options. Daryl, yeah. I got 4,020 shares now. I had to liquefy a few to pay rent. Yeah, that's it. I sold, my favorite is I sold the sell button for more shares. I can't sell if I wanted to. A contract is the equivalency of 100 shares, yes. And then you pay a premium, which is expressed as a single share. So you multiply it by 100. So you're getting 20 cents per, or 10 cents, or 0.07 cents. Writing a call option. Yes, that one I got right. Now, what about the puts? If you write a put, you have to have all that money locked up to be able to buy that guy's shares at the price that you set. And then if it goes in, so actually no, so that's a limited risk, right? Because you set the price that you buy at, so you either get it cheaper or you get it that price. So that's limited risk. Yeah. So if you wanted to buy at $14, you basically just paid a premium to buy at $14. If it goes way over, oh, that's buy. Sorry. If you wanted to sell, so then if you wanted, you wrote the ability to sell, he could give you garbage that is now more than market price and sell it to you at a lower price, and he would lose money. If it goes way down, then he sells it to you at $14, but the current market price is $6. So you still give him all your money, but now you have something that's 50% less valuable. Okay, so it's writing a put is the one that gets you effed in the ass because you can lose all your money and be given something that's worthless. Whereas the other one, writing a call option, the worst you can do is hand over your shares for the price you agreed upon. Got it. Now I got it. Okay. Holy crap. It took me a while to pull all that option shit out of my ass. Okay, so the dangerous one is writing a put option. Okay. Fuck. Wow. I mean, there's whole books on this. It's not really that hard. It's 4 choices. But it's the risk of losing $60,000 if I get it wrong. That's the part that, puts a little bit of spring in my step. Okay. So, now, what are we going to do? Maybe I should just get my feet wet and do something tiny. Like $14 by the end of the week. $14.50 is the same price. But see, these don't pay out enough to make it worth the commission. My commission's $60, and it's probably one way. Yeah, naked puts are pretty much illegal. That's probably yeah, you can do it just like you can do naked shorts, but that shit's as bad as it gets. Yeah, exactly. So a naked put, sorry, a naked call. No, well, okay, a naked put would be illegal because you'd be offering somebody to sell something and you don't have the money to back it up. A naked call would be as risky as a naked put, but not illegal. Because a naked put says, I will buy it. I don't have the money right now, but I will buy it, right? And then with a naked call, or sorry, no, wait, no. Okay, I don't have the shares and I don't have the money, but I'll go get the shares when you want them. That's valid. The other one is I'm gonna buy something from you via the sell method, and I don't have the money for it. That what happens when you don't have the money? Then he can't sell. But with the other one, you just don't buy. Yeah. And I guess you'd return the premium. Yeah. So one's illegal, the other one's bad. Basically. Yeah. Okay, anyways. I don't really know. Options are quite new to me. Well, they're not new, just I've never used them in practice. I'm much more confident with stocks. With stonks. Mm-hmm. Yeah. No, Elon. We're not plotting. Whenever SpaceX can land a rocket that doesn't explode, that's probably the time we're going to squeeze. Oh, if we're talking about that, I squeeze my lemons all the time. In fact, if this mic wasn't on mute, I'm just running a whole lemonade stand over here. Just out of curiosity, so if I was to go to December, and I said, that the stock will be $20, I'd get $1.89 for that. Wow. So if I pay $3.45 per share, okay, so basically if you want to buy an option in December for $10, right? So you're betting that it's going to be above $10. It would actually have to be $13.45 to break even in December. But the second it goes over that, you'd be making hand over fist money because you didn't have to put down the capital. You just put down the premium. Yeah. So you can gamble a hell of a lot more on margin, but you still have to make an extra $3.45. Whereas if you just bought today and held to December, you would keep that premium. That makes sense. So there's the difference. But the premium basically protects you that if it goes lower, you're just out. If it goes back down to $0, right? You don't lose anything. Okay, I got this. I'm just trying to fit it into the scheme of when would I use this. So when I want to make money, but the risk of it crashing is too high, then I pay my insurance money. Okay, I think that's what I'm going to go with. So I'll trade my stocks. because then I don't pay the stupid premiums and I pay a lower commission. And then when things start to get really dicey, like if we see that fucking robot again, then either short sell, which I can't do right now because AMC's utilization rate's through the roof. So I'll just do options, which essentially is short selling. Better than short selling. Okay. I like it. I think we got something here. Okay. All right, let's see if I can answer that question. So, you're in a bull run, which would elevate the price because people think it's going to keep going up. So then you're going to sell bets that it's going to go down. So you lose if it actually goes down. You win if it continues to go up. Oh, you're buying puts. Nope. Okay, now I got it. So now you're betting on it going down. So then they would be at a higher premium though. But because it's going up, people are like, no, the likelihood of it going down is minimal. So these puts are going to be worthless. Wink. But you're smarter than that. So you buy them while it's going up. And then when they turn around, you're like, double middle fingers. Got it. Yeah, that sounds pretty good, Daryl. That makes sense. Yeah, I gotta get my terminology right. So you got calls, which are buy and write, and then you got your puts, and you have your buy and write, or whatever they call it, bid and ask. What do they call them? Put call, and then they're calling them. Yeah, calls and puts, and it's bid and ask. Okay, yeah, bid and ask. Yeah, but instead of ask, in this case, you can say bid and write because that denotes the difference. Because ask is sell or the price the seller wants to offer, which is correct, but there's something a little bit more that happens with options because the writer takes on obligation, where the buyer buys the ability but not the obligation. The buyer does not have to, but the seller does. Yeah. Got it. Got it. Okay. So, let's go 11 days. Let's go to the end of this month. And let's offer to sell my shares. So I know I need the money at the end of this month to pay rent. When do the options close? They close at, oh no, wait, I can close the option early, right? So by the last day, I can close it, at the start of the day, and I'll lose a little bit. But then at that point, I'll have all my money from the person. Oh, but if he chooses to exercise, I'll get hard cash. If I close early, I got to find a buyer to take my thing, and I'll get a little less hard cash, right? Yeah, it ends on Fridays, and I think options get resolved, what, at 3 p.m.? Or 5 p.m.? They get finished out of the market. Or just outside of market hours, I guess. No, I'm just trying to understand. So if I need the money for the end of the month, right, to pay rent and all my bills and all that sort of stuff, right? So my options are I can close the contract early and get less money. So if I'm profiting, I would get less profit than letting it run to the complete end, where I would hand over my shares for premium plus whatever the strike price was. If I close early, I would get a little bit less, but I'd hold on to my shares. Or no, I get my premium and I hold on to my shares. But I have to use a little bit of my premium to close early. Yes, because I got to offer the buyer something. Yeah. Okay. So my premium needs to be large enough to cover the eventual early close, unless I want to hand over all my shares. But if the market price is not even friggin' close, the person won't exercise because they would pay so much over market to take my shares, so they'll let it expire worthless. In the event they do take all my shares, they're paying out the ass for them, and they're stupid, and I just made a lot of money. Okay. Because at that point, they'd pay me for my shares. Right. At the strike price, which is way over. So if they really let them exercise, that's their fucking... So I shouldn't actually close them. So if it's $7 and we agree on a $15 strike price, I want that baby to run all the way to the end, because he would be paying double. Yeah. Yeah. Okay. I got it. Yeah. I'm starting to get this now. Let's see. What's going on here? GME is going into that dome shape. That's always bad. And the market's just kind of teetering down. So, yeah, we could be going into a wide W, but usually the middle is not big on a W. So this might be the W. And we still got, yeah, we might get a little bit of boost in sour hour. Okay. Yeah, because I don't want to bet on the $14. Because if we do get a short-term squeeze, it's going to boost us pretty much up to $14 in probably 3 days. It'll probably take us about 3 days to get up there. So I want to bet a little farther out, because I don't think we're going to get to 2026 price-wise. And we will definitely not hold that probably before summer. So I could technically bet as far out to June, but seeing how this is my first option, I'll play it a little closer. So in 11 days, there's probably no hope in hell we would get to... Well, no hope in hell we'd get to $20. No, $26. Absolutely not $26. 20 maybe with a hard squeeze. But then I'm losing $6 if it goes to peak. Yeah. But then I'm making premium for the risk of sitting out for the next 11 days. Yeah. It's not really worth the trade-off because then you can't play. Because once your money's free, you're rich, right? So then you could do the weekly bet, but then it's not worth it because if it squeezes, you're going to get burned hard. Whereas if you bet over a longer time frame, the squeeze will come and go, and you won't be burned as hard because you have more time, right? Even though I highly doubt there'll be a squeeze, there's just going to be a ramp up. As soon as we hit probably this curve, we're going to ramp up. So let's see how far out that would be. Oh man, I'm going to have to clean this up soon. I can barely see what's going on. So the end of month is here. If everything goes well, we would be, 16, 17. So you could probably safely bet $20 before the end of the month. Is not going to happen. They can't exercise the option. They have to. So to exercise the option, they have to let it go all the way to the end. So the for the person on the other end of my written contract, their options are pay me the money at the strike price, and I give them my shares, and that is if they let it go to the end, or they sell it back to the market. So all contracts have to go to the end, basically, but they can sell it back to the market, and someone else can pick it up with a loss of the premium that the market maker does. Yeah. I just heard it now, Marshall. Oh, so they can exercise early then. Okay. That's what we were talking about earlier. I thought they could exercise earlier, but then we were talking about it going to the end. So they have two options. They can sell it back to the market, or they can exercise earlier, right? Yes. Yeah, so if I did a cover call at 20 and they wanted it, they would pay way over market price. And then the seller gets the 800. What's the 800? Are those shares, or does he get the premium? Yeah, well, if options go to expiry, then they're resolved if they're in the money. And that's a rule that stops short sellers from tanking the option market. So you can't allow the market does not allow you to let it expire if you're in the winning hand. You have to take it. But you always have the option to close down while you're winning, or let it expire worthless, or close down before it's absolutely worthless, which, it's up to you. It's just like stocks, right? But I thought you guys told me that exercising is only when it gets to the end. So I can't, at any point, pull the shares from the person, right? Because from the books I've read, you have the ability to exercise at any time. So you should be able to exercise your contract and say, I want them at whatever price, right? But then what's then how do you sell your contract back to the market? Or is that basically selling your contract back to the market? Just so we're clear on this before I do something I shouldn't do. Okay. And can you also sell the contract to the market? So you don't exercise, but you sell that contract to the market at some loss of premium or something. Or your options to take the shares or expire worthless. Because I thought you could buy and sell the contracts as well. Though if they exercise early, they would pay you the price for where it is. Okay. So you have to close out your position, basically. So if you want to get out of the contract, you're going to have to fulfill the contract early. Okay. Yeah. Okay. Yeah, because from what I was reading in books, I thought you could. So you can essentially buy, sell. And so you can have a contract, but you can buy a buy contract and you can sell that same buy contract. So there's buy and sell for each of the bid and ask for calls. So you can buy and sell that, and you can buy or write and sell your written one or close it, right? Yeah, I guess we're on the same page. Yeah, so that's just basically closing and closing. And by doing so, you're closing your end of the agreement, which is essentially selling it back to the market. Now, am I affected? If I'm the buyer and the seller decides to close out early, do I just all of a sudden see a bunch of money in my account? A call owner immediately profits, and then they have unrealized losses if it goes over the strike price. A call owner's has a fixed schedule of winning. They don't get extra winnings. They get a one-time winning. Yeah, that's the amount you would get when they get your shares. That's the price of, well, if you're the buyer, that's what you got to pay. If you're the seller, that's what you're going to get. The only difference is the premium is kept by the seller, regardless. So no matter what, you're getting the premium. So if the seller is in the right, he gets the premium and keeps his shares. If the seller's in the wrong, he loses his shares, gets a bunch of money and the premium. The buyer gets the shares at discount price, if that price was ever reasonable, and or he gets a discount price relative to the current market price, and if he gets it wrong, he loses the premium. Yeah, there's your two sides. Yeah. Yeah. And that's kind of the part where I'm getting hung up there, Backstop, because that's exactly what happens. So by it so we're simplifying it, but in the background you are selling your sell position, right? So when you write a position, you're buying into the ask. And then when you sell the ask, you're selling your ask back to the market, but the market won't take it unless you basically buy a contract to replace yourself. So that then is basically you buying to cover your spot. But the key difference here is that you bought to cover yourself, so the market's happy. You didn't actually close the contract, right? The buyer still goes on and does his own thing, but the seller's gone somewhere else, right? So, like, you're not reliant on the seller being there the whole time. So if I want to exercise, right, I can always exercise. I wouldn't be stopped if the person basically. So when that guy closes his position, he's basically buying a contract for 2 cents, shoving it in the position that he was to cover his ass when that guy exercises. Or he could just roll the dice and hope that guy doesn't exercise, at which he would save himself 2 cents, but then lose his shares. Right. And then the buyer doesn't give a shit where the shares come from. It either comes from the covered call that you put in there or from you. Either way, doesn't give a shit. Okay, now I got it. Oh my god. Yeah, because we're over summarizing it, but essentially I'm reading these really technical books, and so they're telling you how the market actually works, but you don't need to know that bullshit, right? You don't need to know when you're buying and selling shares that it goes through a market maker and an exchange, and there's all this crap that happens. You just need to know if you have shares and it goes up. Yeah, okay. Yeah. Okay. I just wanted to make sure that the buyer-seller relationship is not dependent on each other. Because that way, if you want to exercise, you're not going to get surprised by somebody that's more intelligent than you or is playing some type of game. So there's no randomness, right? So that's all I want to know. Because that way you're not, rolling the dice and then poof, oh, something you didn't know about. Like shares, all of a sudden, poof, a robot. Okay, I got this. And that's how you can close out early. So you basically just buy out your end of the bargain. Right. Yeah. That makes sense. Okay, so with all this knowledge that I've learned, since today was Learn Options Day, which I think we pretty much nailed it. Yeah, not bad. I'll now be able to advise people in a non-financial sense on options. Yeah, because I just need to put what I've learned into practice. Well, options are hedging. So if you're going to let it go to 14 and then just sell, then just let it go to 14 and sell. Or you can get somebody to pay you for such luxury and then hand him the shares and keep the premium. So in that case, it's better to write an option for 14 bucks. But if you're going to hold on to these shares for a longer period of time, right? Like you're going to go to $30, then you might as well just hold on to them and ride them up. But what we're talking about here is we're taking the gamble that if it keeps going sideways, and even if it catches the upswing, I'm still waiting with my shares, so I might as well gamble the potential loss of upswing while I wait. The risk is that it shoots up the second I make this option call, and then I end up giving my shares away for 14 bucks, and whoever was the better gets it. Either way, I still get my money back and a little bit extra, but it doesn't, come close to how much money you would have if it squeezed, right? Yeah. 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 Sideways would be good. And that makes sense because if the stock's going up, it's risky, right? If the stock's going down, you're not making money because everybody knows it's going down. So it's going sideways, then they're like, but it could go up. There's a chance. Except, no. Yeah. Yeah. Well, that's what I'm thinking. Yeah. I'm thinking I'll set it at like 16 bucks or so. So I'll lose a little bit on premium, right? But the odds of it executing are low. And if it does execute, so if it is in the money, at worst it will be 20 bucks and I'll lose, a lot less than if it's 14, right? So you can weigh out. Yeah, exactly. You could weigh it out. I think we'll be 14 by the end of the month. As soon as we break out, it's going to be really fast. But I could go even further, and I could guess that once we hit 14, there'll be a massive sell-off. There'll be a little bit of recovery. Then we're going to push up to 16, 18, and then it's 23 and 26 are the next big holdouts. But I highly doubt we'll be 30 by fall. We will not be 30 by June. Unless the pandemic just ends and there's so much exuberance. But see, this is it. You're trying to predict the future and a price, and it's not easy. Whereas stocks, you just have to wait. So, in my case, pretty high. But there's true. I might sell before 25, right? Like, yeah, it's a good point. Yeah, I usually get about 40 to 60% of most rushes. Usually I don't make 30%. So if I do think of it that way, if it did go up to 25, chances are I'd probably sell at 22. So if I set my limit to 20, there's 30% I wouldn't have gotten anyways, and there's 20% I lost because I lost the bet. Yeah, I guess that's a good way to look at it. Yeah. 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 And I know if it hits 25 or 26, it'd come right back down. It's not going to stay up there because this blue line represents our curve, right? So we're really only worth $10.82 at the end of this month, plus hype. So anything below 1082 is value. Anything above is potentially hype, inflation. But it doesn't mean we can't go there. This stock does take off like a rocket. But 15, 16, 17 would be really hard. You know, we did this in 3 days. So 3 days we did 79%. So if we're where we are, to go up to 20, you'd be doubling your money. Yeah, and the odds of that are like, geez, unbelievably low. Even 14, at this rate, 14 in 11 days would be 42%. We can do that in 2 days. So that gives me a 1 to 7. I would say 17 to 18 would be probably the absolute highest. So if I go 17, the odds of it executing are low. The odds of it going over 18 are really low. So that's kind of the middle ground. Yeah. All right, let's see what 17 gets me. 17 gets me 15 cents to the end of the month. If I dial that down $2, I get an extra 2 cents. If I go down one more dollar or 50 cents, I get 20 cents. So I get an extra 2 cents if I go down to 14.50. What is that, for end of the month or end of the week? If it's end of the week, yeah, 15 is yeah. I'm betting on 2 weeks. Because if I bet on 4 days, I'll get 4 cents or 3 cents. Or 7 cents. If I make it 2 weeks, I'm getting infinitely more money. Smart. So right now, if I bet 14, I'm getting 7. 7 and 7 is 14. So I'm getting a 5 cent premium for betting now for the extra week. So if you do 15 and then next week do 15 again, there's 4 cents worth of premium you're not getting. But if you lock yourself in for the extra week-ish, then you're making a few dollars. Well, as long as I set a price, if I set the price to exactly what I paid, then it doesn't hurt unless it goes well over. Yeah. I would think so too. If we hit 14 or 15, I think we're going back to 14. We spent so long in the dirt here, like we're a really tense spring. We are going to rocket, and we're probably going to blow right by 14, but we'll come back. But I don't know if we'll come back before the end of the month. I guess we would, right? So if I draw this, if we somehow go from where we are here to 14, we would have to come back because that's almost a 70% increase with no recovery, right? Maybe that's the play. And then if it hits 14 and comes back, then I just close it out here. If it doesn't, then I get my money. But then I guess the risk is that it could do this, and then I just get my money and I miss out. Then when it comes back in, I use my money to buy the shares. Yeah, okay, that's good. So if it times perfectly, then no problem. If it times poorly, I just wait and I buy back in with the money I was given. Okay, so all I have to do is make sure I cover commission, basically. So, okay, I think I got this. I got this. So I can play this one really tight because really there's no risk. Like, oh, I miss out. But we'll come back. Yeah, okay. Yeah, see, as a stock trader, you don't think about the future. You do, but you don't because you don't care. But in this case, I'm now mixing the future and the past. It's like some form of stockception. Oh my god. Okay. Is the stock price going up? It is. Okay, so if I bet 1450, yeah, 1450 is 1 cent, but if I go to 15, it's 2 cents. Yeah, 15 has a 3-cent delta, and then 16 is actually 16 cents. It's gone down 6 because of the interest, eh? Neat. Oh, man, is the stock price even moving? I'm looking at the chart and it's like, no, it's not. Holy crap. All right, let's go 2 weeks for $15. Okay. It's dead, Jim. Yep. And you said it's an option, and it's sell to close. Where is it here? So it's a call, and it's sell to open covered. Right. Right. Because I'm selling an opened cover. Okay. Then to save on my commission, I'm going to attach a profit taker, which is buy to close. But where do I set the buy to close? No. It would be a stop loss. Okay, I put a stop loss. And do I care? No, because I don't care if they exercise. I could close just before, but then I would lose another premium. So actually, no. So if I write this, I'm basically committing to selling my shares at price 11 days from now, or not selling them and keeping the premium. Okay, I got that. I'm perfectly fine with that. Okay. Oh, and that's what the limit on the limit is, because the ask and the bid are moving so quickly. If you set it to a certain price, you can pick it up when the stock moves in your favor. So I could actually set this to some weird ass number and not have to. Oh shit! And I don't actually have to pay attention. Which means if I buy this option contract at the wrong time, I'm not getting as good of premium. But the premium represents the risk. So if it starts going up, my premium would go up, but then I'd be buying into a contract that has increased risk. There's the other side of the coin. But the farther you buy out, as it gets closer and closer, there's a time decay. So there's a sweet spot between time decay and proximity to being rich. And that's where your skills to pay the bills come in. Got it. It's like my learning skills. Neo is an interesting buy. Just give me 1 second. I'm going to place an order here and see if I can do this right. So actually, I don't need to close the contract. I just let it run. Okay. So okay. So I'm going to get $820 US for loaning out my shares, essentially. Okay. How much time's left in the day? Okay. I'm going to see if there's any biters for 1 cent over current asking price. Okay. Now I'm going to watch as my order goes to review. Okay, let's see. Where is my... Son of a bitch, look at it go right up, eh? Fuck you, price. um, okay, is it okay? Oh, it was accepted. I thought it had to be reviewed. Okay, that's good. So no problem. Okay, I thought I got a little greedy, so I'm in for 23 cents at although I could probably adjust it. I'm not in yet. So I set it to 23 cents. It's going to execute in a second because this is going up. Nope, never mind. So 23 cents for $14. No, it hasn't executed yet because of limit. It should execute in a second because this little green guy is going to push up the price. I set my limit a couple cents. Yes. I'm selling to open. Oh, sorry. So Neo is not bad. We'll go back to that. So Neo is not bad. It likes to recover a lot. So right now you got a really good U shape. So I would probably, if it goes over the price it is right now, I'd probably play this part. And then be careful when it gets close to the top. The company itself, like look at that plummet, right? I would short sell this stock to play it, but if it shows any weakness, especially if it goes over halfway of this curve, short sell the crap out of it because this you don't walk away from. They powered out through it, but you can see it went immediately flat. They tried to power up. They got shot right back down even lower. So now they have this to happen because, come on. If you look at the 1 month, right, they've had one hell of a fall from grace, right? So they haven't even recovered from the first collapse. They did a dome shape, and they're basically just bouncing. So unless you think their prospects are really good, you've lost 42% of your money. And if you're really good, every bounce you can make 30%. So, they're going to probably try to jack the price up. So play it. But if it starts to roll, short it. And I've made a good amount of money. You can see kind of here. Short selling this guy. But that's my non-financial advice. So hey. Okay. So now we're at the edge. And my option hasn't triggered because I set the price too high. Come on. You can do it. You can do it all night long. So the ask is at 0.22 and the bid is at 0.21 and I'm offering for 0.23. Come on, 1 penny. Oh, but I can finally afford that new mic. Ugh. Oh, I think we're gonna break through. I'm gonna get this my option thing is gonna go. Yep, it's 22. As soon as that bid turns to 0.22, the ask will turn to 0.23. Oh, come on. 1 cent. Look, we broke through the mythical line. What? The ask is less than the bid? What the hell? Oh, no, I'm misreading it. Okay, whoops. I was looking at the price. Okay. I was like, what? How does that happen? Yeah. Yeah, this should be the 3rd time, so it's going through. 1, 2, 3. So, yeah, this line's at 75, which is probably where the ceiling is. Yeah. Come on, option, execute. Come on. Show me the money. Let me take a look. 1 day. And no. If we look at daily, there was a risk of a crown. But yeah, that was a risk of the crown here. But the crown should be 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. The crown should have been right here. So when we trickled down, there was a risk of a crown, but since we had that upswing, I think that risk is all gone. That those last 2 days, 3 days before today, they saved us from these green days saved us from having a crown. Now, if it's going to happen, it's going to roll like a dome. Then we will just crash, but it won't be this crown. Because it showed that it didn't want to do it here, but that could have been delayed action because of the U shape, whatever. So I was worried, really worried here. But when we had that 30% day, I was like, oh, thank the Lord. So, yeah, I think we're okay. Looking at the longer term. Okay. Well, not bad. So I'm just waiting for 1 more cent for my option to execute. And then I will be rich. Okay. Almost there. You're going for 970 at close? Yeah. I'm going to go with 980. I think we're going to drop back down, and then we're going to basically rush up. But now that I'm trading options, I could care less. You know? Although I'm going to have to adjust this limit order because I might not execute by end of day. Like crap. Now this could be an S shape. Eventually we're going to get back to this blue line, which is like our bare minimum line. So our bare minimum line, where does that have us at the end of this month? Oops. It's a lot of clutter. Oh my god. Okay, our bare minimum line has us at 1120 or so by the end of the month. Oh no. 1055. So I'm $4 over. Maybe. Whereas like right now we're treading the line. We were under the line. But normally we're about $1, $2 over the line. I guess that's the risk. Okay, let's go back to this. The 1 minutes. Yeah, that was unfortunate that it couldn't get up and over. Just channeling sideways. I wonder if I pay commission on any order I submit. Do I still pay commission on an order I canceled? Yeah, no, you're paying like insurance money, essentially. Maybe this time I'll catch the 23 cents. Yeah, that's literally, you get the option to do so. Oh, we had a person earlier, I don't know if he's still here, asking me about Space Engineer. I crashed 3 more spaceships into the ground. And then the premium's variable, Dr. Overkill. I finally made it into space. I had to modify my spacecraft to have 2 large hydrogen tanks. But I made it into space. Poland can finally into space. So I got the AMC theater set up minus the screens. I got space capable flight. And it's a public server so anyone can join. when I'm playing. And what was the other thing I did? Damn it. Oh, I downloaded a game called Valherin or something. Not the survival game, but the wait, no, that's the survival game. What's this game? Oh, hold on. So sorry if that disappears. Uh, yeah, there it is. And wow, it's still looking at the window, even though I minimized it. That's pretty cool. So I downloaded Ancestors Legacy. That's Company of Heroes, but done as Vikings and Normans and Saxons. If you like Company of Heroes, I recommend it. I was expecting something else, like a more squad-based RTS. And yeah, squad-based, but it's squad-based like Company Heroes. Anyways, not bad. If you get it on sale, pretty good. I'll explain it to you in a second, Doctor, unless Backstop wants to keep typing. Yeah. No, I looked up. Clorox won't sponsor. They only sponsor neighborhoods that they have factories in. But if I could find a different email, I might be able to get a sponsorship. Oh, definitely. If we can't show strength, then we're going down. You usually get 3 tries, so we should actually be going down. Here. But I was really hoping to catch the top of this premium. Oh, Belts, you're back. So I'm gonna sell a covered call, and so I'll be able to get a new microphone and pay rent this month. Yeah, well done. Yeah. Oh, that's true. And welcome back, my name. Yeah, let's get a lemon in there. So I want the price to go down or sideways, but I need it to just go up a little bit more so I can get a nice spicy price. It hasn't executed yet. I'll definitely take money. I won't turn that down. But I don't have any way to do it. Yeah, we don't have Super Chat because I think I have to have 1,000 subscribers for that. But I do have shit, what is it? A Ko-fi account, Ko-fi. But the problem with the Ko-fi is it goes to my not-for-profit, and if I start taking money into my not-for-profit, that's fine. But it won't go to the channel because I can't. It'd go to me, but I can't put it on the channel. So, no, I'm not here to make money. so it wasn't really a priority. Though monetization wouldn't be bad, because then I could buy shares with the ad money. It'd be a perfect cycle. You see, I trade stocks, and then that gets ads, which then, oh my god, it's stockception. Yeah. Now it's going through the lemons. Man, I am not going to get this limit order, eh? But here I will. Oh, it's not the ticker. It's the I know what it is. Sorry. It's once in a while it loses contact with the screen. There you go. Sorry about that. So that link there goes to my not-for-profit, which does technology in cities. But you can do monthly or one-time donations, and I get 100% of it. If that's something you want. So, yeah. But yeah, no, the coffee system's great. Just off you go. And monthly payments are awesome because then, a cup of coffee a month and you forget about it. And then it's great. Also, if you live in Canada, you can buy anything from the shop and I can ship it out. Or if you're in Ottawa, I'll just hand it to you. Crowded trains. What a fucking mess that was. All right, so yeah, it looks like it's not going to execute my thing. Let's go back to the option chain. Yeah, we're all in it for the long haul. Some of us because we have to. See, you were born into the stock pain. I was in the stock pain, and I was like that before I was even a man. I am the stock pain. That's the difference between you and I. No, muffled cries. Cries in Bane. Bane cries. Yes, Dr. Overkill. If it executes, you're going to get $20, or you're going to get strike price times 100, right? If you're buying, that's what you owe. If you're selling, that's what you're going to get. But there's a lot more to it. Oy. Okay, where's 14? Yeah, cries in Bane. Bane intensifies. I was born into the darkness. You merely adopted the stock pain. I was forging my diamond hands when you were just a child. Yeah. Yeah, I am usually day trading AMC as well, but I've been stuck for the last almost month at 14. I was not expecting this long of a downwards trend, nor was I expecting pandemic variants or an ineffective American/Canadian government. So here we are. Yeah, so now I'm going to finally get off my ass and learn options so I can trade in a sideways market, which is what options are great for. Well, it depends which way you're going, Dr. Overkill. You can buy or sell the right to buy, or you can buy or sell the right to sell. So you have the right to buy at a certain price and the right to sell at a certain price. And you can be the person that writes that agreement, the contract, or the person that buys into the agreement. So that is, you got 4 ways to play. But if you're buying, calls are you're expecting it to go up, and puts you're expecting it to go down. Because calls give you the right to buy at a certain price. So if the price goes over that, you make money, right? Because you could buy from the market for $15, but this dude's going to give it to you for $5, then you sell it to the market for the difference. On the other hand, if you're buying a put, you're hoping it goes down because he's going to give it to you at an inflated price and the market is currently lower. So then he'll give it to you for $14 or whatever you agreed upon, and then you sell it back to the market for $7, but you keep the difference. So you have now whatever, right? The difference is 14, 7. So you got double your money in that case. Yeah. Yeah. Did I get that right? Yeah, the puts are you're betting it goes down. Because, because puts are the right to sell. Right. So then basically you buy from the market and give it to him and you keep the difference. He pays you $14 a share and you give him $7 shares because they've gone down in price. Yeah, sorry. That's a put. Fuck, this is getting all over the place. All right. Yeah. Yeah, it doesn't look like I'm going to get my call to execute. Sad pandas. And I only needed a cent. Yeah. Or you're short selling. Probably. Unless something's critically wrong, I highly doubt we're going to get to 30. But you never know, right? There's a great uncertainty. I'm in AMC for the long haul, so there's less that I need to care about. But I'm trying to get this stupid call to execute. And it is just killing me right now. Oh, maybe this will be where I get it. Oh yeah, of course. 100,000? Like, whoa, look at that volume. Woohoo. Volume out of nowhere there, Batman. So that's not a lot of volume, it's only a 13. And we've been trading kind of low, but still. A nice push. Maybe my fucking call will execute. So that was 180,000 on my trading platform here. So if we go back to this. So if we're using the more professional view, yeah, there's the spike in volume. So it's not that critical. You can see that the volume on this chart You see those two greens and then that big green? Where here, those are the two greens right there and the big green. So my volume in this chart doesn't quite line up just because that's free and this is a paid professional software, which does charting a lot better, but I hate it because it's clunky. But anyways, it's good volume. And I really like this though. This is probably my favorite feature is the trend. So you can see if it's like green, red, how's it going? And yeah, volume is nice to see it ticking away. So anyways, but I'm keeping that baby on the side since I had to bring out the big guns to do option trading. Again, there's no hedge funds. I don't think there's really a conspiracy. You know, all these YouTubers are going on about all these conspiracies, but with what evidence? And even if they had evidence, they wouldn't have evidence. Because if there was some manipulation, the SEC, who are infinitely better at detecting such things, would have put all these people in jail, right? So how is some YouTuber detecting the mystery? Yeah. I mean, a squeeze is possible. Squeezes are always possible. But you have to have the right environment. And going up 4% a day ain't the right environment. Going down 7% yesterday ain't the right environment, you know? So, yeah. Oh, yeah, definitely not a squeeze that's like, you know, Volkswagen style squeeze. Because we've already had a squeeze, you know, back in January. And then we probably got more short sellers, and we're going to have another squeeze around probably 26 once we shake all of them out. Then the next squeeze will probably be around 30 as we shake out the long term holders. They'll probably close their positions early, get their profits and all that sort of stuff, right? Because the January caught them off guard, but the second time it's not going to be as bad. They're not going to be stupid. So, well, the SEC is like the IRS. They seem stupid, but when you piss them off or they care, they'll come at you in a ton of bricks. The problem is, like, why would you ever throw Citadel under a bus? You know, you just want them to stop committing stupidity. If they're not doing it maliciously, you just punish them so that there's financial punishment, right? But then even whistleblowers come out and they're like, look, this guy's committing fraud. And then it's like, and then they get hit by like a multi-million-dollar fine. But then when you really look at it, it's like, it's not fraud. It's up to interpretation. But the interpretation is it's fraud. So it's like, they're never doing anything that's like overtly bad, like funding the Colombian drug lords or something. But they may look the wrong way, or they may have been told it's a drug lord's secret money stash and just chose to forget it, right? So it's never very overt. But yeah, I know what you mean. Yeah. They are right that if you buy up all the shares, then you get to determine the price. But the stock market AMC has over 409 million shares to go. The float is still out there. There's tons of available shares. There's just not a lot of shares to short, which is what they're going on about. But there's still tons of float. So we're not squeezing anytime soon. All that's going to happen is short sellers are going to have a harder time short selling. So I don't know where they're going with this, right? because the utilization, I had to look it up because I wasn't really familiar with it, is the how much of the available shares to be lended out are lent out. So it really means nothing because they can increase the lending, which I believe is the short interest rate, or the short interest is how many are lended out. And then utilization is how much of that is being used, I believe. You should be able to just click it right at the bottom here. Just hit 3 month. No. It should give you just a copy of my chart, I thought. So 30-minute interval on, what a mess. So whoop, whoop, whoop. And there you go. I just updated it. So now you have what you're looking for. Young Padawan. But yeah, there's the first one. And here's the second one, which we're kinda, sorta following. So if we follow that one, we might hit 14 by the end of the month. Maybe. Yeah. Yeah, because if there is going to be a squeeze, it'll probably happen in the pre-market. They'll basically liquefy in the pre-market, take their lickings, and then when the retail investors get in during the day, they'll just demolish whoever didn't sell, right? Because then they're getting the FOMO, the fear of missing out. So sorry, I just got a message. Okay, I have to sign a document. Shoot. I sent a document, but I didn't give the doctor authorization to fill out the document, even though I said fill out the document. Where is said document? Okay, here it is. And there is said email. Need a new tab. Okay. Sorry about this. Oh my god, computer. I love it when you click a link, nothing happens, and then it opens like 20 windows. So you're like, thanks, Windows. You never have a stroke, and today is the day. Excuse me. Okay. Okay. Fill in my name. Justin of the Kellys, Lord of Bayshore. And draw. And let's zoom in. And normally I do this after the fact, but this is super important. I need to get paid so I can buy more stocks. So I'm off on like a health disability, partly just because I found out that the medication works too well. That's what really did me in. I'm a lot better now, but it's easy to relapse, this stomach issue I have. So I rather, if I can just not go back to work and relapse, that would be great. Even my doctor was kind of like, why are you even going to work? And I'm like, oh, that's an option. And so here we are. Yeah, as soon as the doctor's like, yeah, why are you going to work? I'm like, good point. Good point, doctor. It's nice not working. Stock market's covered me for all my bills and expenses. But now, the insurance that has robbed me blind, it can pay. I'm getting my money's worth. Let's see here. Gmail. Okay. I don't need you seeing my medical messages. Hey, Mr. Zeus. I'm just filling out a form so that I get my insurance money. Just double check it's signed. It's still on track for what I expect it to do. I really wish it would just do it faster. Let me just make sure it's the right page. Page 7. Shit, I didn't sign the right thing. Ay. Good thing I double checked. Yeah, so it's still on track. I just learned that I can trade options. I'm now a little bit more confident in them, so I'm going to try trading AMC since it decides it's going to keep going sideways. And today's date is 19. Okay. And I think if I'm right, I actually get back pay as long as it's not too long. Yeah. But anyways, this has nothing to do with you guys. Just something I gotta do. And I signed the wrong form. I signed the original, ruining it. Good stuff. All right, it is the 19th, 04, 2021. Okay. Wonder if she's gonna. I have to sign apparently 2 forms. One is for psychological illness. One is for physiological illness. And I think they're together. So I'll just sign both. Good thing I triple checked. At least this insurance form is not too ridiculous. It's actually one of the better insurance forms. Yeah, it's like 3 pages. It's everything they need to know to process the claim. It's pretty straightforward. All they want to do is make sure that if they're paying out insurance, that you are taking your meds and that your meds aren't going to kill you. And that's pretty much all they do. So an insurance claim adjuster person is just going to review it and be like, okay, because basically if the doctor fucks up, then the insurance company has to pay even more. All right, so there we go. Okay, message sent. Hooray! Now I'll see some money in about 6 weeks. All right, so my so I had a covered call trying to go in for 23. It's now 21. Sad panda. Okay. So it actually didn't move too much with the market shift. And eventually it's going to fulfill. If I leave it long enough, it'll fulfill. Because of the time decay? Oh, yeah, but actually, no, that's not true. It will go up, but if the time decay will go to 0. Right. Never mind. I'm wrong. So maybe I should just execute this baby. Execute the baby. With extreme prejudices. I feel like, though, I can get a better price than 21. I guess I could just adjust the price. Yeah, I could just adjust the price to a different. Oh, I guess actually no, the strike. I'd have to cancel it. Yeah, yeah. Everything's gone down about. Actually, the best one right now is 24. 13. You're getting 2 cents extra, and if you do 12.50, you're getting 4 cents extra for the dollar. But then going from 13 to 14, it's only 3 cents. Damn. Yes. Well, you'd be right, backstop, because when the intrinsic value doesn't move, then the only thing that happens is the time decay, right? And imagine options had no time decay. What a wild west that would be. The prices would just stay fixed and it would be completely based on demand. It would be messy. I want to buy my first option. Babby wants his first option. I want to see how it reacts when it gets over here, which we will see today. I want to see it stay away from this blue line and it to trend up like this. So. Yeah, exactly. Exactly. That was weird. Yeah. Yeah, like right now we're back at 21. If this keeps going up, it might be able to get to 22. But to get to 23, it would have to go over this black line. It'd be nice to see the time decay graphed on top of the stock price. That would be kind of cool. So you could basically see if the stock or the strike price of your choosing is the better buy, right? That'd be kind of cool. There's probably a cool relationship with that. So as time goes by, I guess you'd have it go down, I guess, the value. So it's technically the same value, but no, wait, no. As it gets closer and closer, farther and farther away, it loses value. So in sideways, it would decline in value. If it starts going up, it's getting closer to the amount, depending on which one you're talking about. So it would gain in value. And it's a combination of gaining in value that dictates the premium price. Yeah. So I guess you would just track the premium price and you would just use its own scale. So you'd be like, premium's going down, premium's going up. It'd be kind of cool. But you'd be technically just tracking delta. Delta is how much it's going to decay over a unit of time. But then you would have to add on top of it its intrinsic value. Only if it's in the money. If it's out of the money, no intrinsic value. And then the premium is solely based on time left and some other number that gives it its base cost. You can Google it up if you care. Oh, man. Will it let me modify the strike price? No. I can modify my limit, but I can't modify the order. Yeah, I'm watching my earnings go down here. That decay is quick. Could have had 23, now it's 20. This day is almost over. Now you can technically get 1550 for free. And the worst one to purchase is 1350. It went down 5 points. Damn. Hey, enjoy your vacation. Yeah, we're doing good. I'm just learning option trading, which is relatively easy, but I've already fucked up. Where's my thing? Excuse me. Here it is. I want to modify my order. I'm going to set it to 20. What's your question? Who they borrowed it from? Yeah, Robinhood's on suicide watch. No, well, how they're selling it, how these people are selling it, it sounds like a conspiracy. So the SEC is just saying, we know you're loaning out shares, but we want to make sure the market is stable. We don't want to have a cascading crash when you find out that the shares that you lent are no longer there, and half the people that say they're going to pay you money are insolvent, bankrupt, or whatever. So go do margin calls and figure out that everyone that says they have shares has them. Everyone that has money has it. That's all they're saying. But of course, the YouTubers are spinning that as go find out what Robinhood is doing, blah, 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 blah. The rule, if I recall correctly, applies to the entire market. And all they're trying to do is just to make sure the market's not going to collapse and implode like it did in 2008 when they found out all the fucking houses were bad and toxic because of fraud, right? So it's not a big deal. The brokerage license is more just the senator. I guess it's a senator being a dick And, you know, he's allowed to be a dick if he wants to, but he's only going to lose its license for one state. So that state won't have Robinhood. So, woo. You know, sucks, but not a big deal. Yeah. Oh, Robinhood. Where's my order history? Order history? I think the market killed my option call. Oh, there it is. Okay. And it still hasn't executed. Holy crap. What happens if I do a market order? Just going to buy the first contract it can get its hands on? Do I run the risk of getting a really bad deal? Or is it relatively safe? Sounds good. I might actually just get it. It's now at 0.20. If I don't want the 1 cent, I could just do market right now. But that 1 cent's a lot of money. It's about $100 difference. Read it? Yeah, you're already losing your ability to speak English. Technically, we're all in vacation, aren't we? At home, with our loved ones, living the dream. There it goes. Now it just went down 3 cents. Sad panda. Man, these options suck. This time decay is horrible. You're like, okay, it'll come up. Give it a second or two. Oh, down 3 cents. Jeez, I'm gonna get no money by the end of this. Now, since most of us don't speak American, do you know what that is in Celsius? Because 90 degrees Celsius is, woo, toasty warm. $90. 1 second. Hey Google, what's 90 degrees Fahrenheit to Celsius? 32. Yeah, that's nice and warm. Yep. Oh, good timing. So where do you go for 32-degree weather? Mexico? Arizona? Mojave? Uganda? Western Sierra? Sierra Leone? Somaliland? Kenya? Can you come to Kenya? Ah, Miami. Not bad. No. My Google Home speaks in an American accent. If an American was living in a cardboard box and speaking like a robot. Alaska. Yeah, probably. That's probably the smartest. Smartest comparison. Mm-hmm. Well, let's see if we can drive this price up with some more lemons. Since today was obviously not going to be a lemon tree day. Maybe. I need a decent price for my stonks. So we're now into the hour of power, the sourest of hours. They might be able to do a surge, and I could probably do a market call on the surge. I bet you they're probably going to do a 15-30 surge. Oh, sour hour, yep. Oh my god, this day's been long. We got 27 million, so the volume's been decently dead. Ugh. Excuse me. Man, I didn't even have to look at the indexes today. It was that slow. You can tell there's a general massive speed difference when the day's not moving quick. A market call in the same day? So a market call is just an opposite or not a limit. So technically all calls to the market call an order. It's a market order to be exact. I call them calls, but so a market order is just a regular order. The limit is a extra information you add on to the market order. Because back in the day, it used to be all telegraph. So you'd send in the order, B, AMC, 400 account number. And then the guy would make sure you have the available funds, shift it all around, then send you a confirmation. Well, this system's based off that. So market just says, give me whatever price, market price, whatever's the best price at the moment. Limit is no lower or no higher, depending. Generally, it's no lower than, and yeah, it's usually no lower than. It's the best way to describe it. Yeah. An option can do market. If you're talking about exercising the option, you cannot exercise an option right away. I would just lose the premium, and it would be kind of dumb. But if I bought earlier today, I think I would have made some money. But this bad boy is refusing to execute, and it's now down to 18 cents. I'm hoping there's a little bit of push here so I can get a little bit higher up so I can get slightly better price. Yeah. So my fancy YouTube update is didn't bring in the people. We only had 300 playbacks today. We normally get around 600 to 300. Yeah, and that's what the really good pros do. Is you do a multi-leg option and you pay off the difference, but a robot has to do it, right? Because you couldn't do it fast enough. But if there's something that will cover your position, then yeah, you can use Peter to pay Paul, and then you just walk away with the difference. So yeah, you're definitely right, Tom. And I'm just not there yet. I'm definitely not there yet. Since this will be the first option I've ever bought in my entire trading life. Because that $60 commission is like, ugh, kill me. And I'm only getting $700 on $60,000 US. Kind of shitty. But, I mean, it is almost 2%. If you think of it that way. So I have 60,000 and I'm getting almost 1,000, which would be 1/60th. So it's not that bad. I've actually still haven't watched it, Overkill. I was going to do it this morning and I didn't do it. Apparently it was quite good. Yeah. Oh, are you gonna sprout a green? Get daddy some cash. I guess since you're here now, Tom, we had a huge discussion about options because I was trying to wrap my head around it with my finger on the trigger. I guess I can ask you this question though: is so if I have shares sitting at $14 right now, does it make any sense to buy a put option at $14, and then basically if the share price goes down, I profit from it? So it's so far out of the money that I probably would pay almost nothing for it. But as long as it goes down, I can cover the premium. Whereas if I bought one really close, then it would probably have too high of a premium because the chances of it being true. No, wait. No, I think I got that wrong. Oh, anyways, I was just thinking if there was a viable option to basically bet on the way down so that your money's stuck, but instead of writing a covered call, you could bet that it's going to continue to go down using your locked-in shares as collateral, because the price wouldn't shift because they're insured as long as you have the money to cover the premium. Anyways, if you get what I'm trying to say, I was just wondering if that's an option. Yeah, I think that's the problem there, Daryl. As I was saying it, I kind of realized because you're so in the money, your put is already valid. The premium shows that basically you're winning already, and you're probably going to continue to win. So you pay a huge premium, but it gives you protection, like in case it goes up. But then why would you do that, right? You could just bring it closer, and then if it goes over, it's worthless, right? But yeah. Anyways, I was just curious because I'm like, I got this money that's just sitting here. It's like, let's do something with it because this horse ain't rolling too fast. Yeah. Yeah. Yeah, but if you're writing those puts, then it works the same as buying a call, sort of. Except in both cases, the writer's just limited to the premium, but they're both hoping for the same thing. So the writer of a put wants the price to go up. The buyer of a call wants the price to go up. Yeah, so they're on the same team, but the one side gets the premium for the risk, and the other one gets the winnings. Writing is selling, yes. The correct term for it is writing, But most people say buying and selling. But then, of course, that gets confusing. You write the contract. Yeah. I mean, it's difficult enough with all the bid ask bullshit. It's like, which bid or ask are you talking about? Yeah. Yeah, it's buying and writing or bid and ask, I believe. So you buy a call or you write a call, or you buy a call and you sell the the call. Yeah. But just so it's not confusing, I think the alternative is it's buying and writing. Yeah. No. I was just trying to understand my options. Um, and I was thinking, yeah, so if you do a covered call, right? You're basically saying if you give me strike price, you get my shares. But then the side gamble is if you paid $14 for these shares and you do a strike price that's 15, you're guaranteed profit at the loss of potential unrealized gains, which isn't a big deal, right? Or maybe it is to some people. So I get that angle. So that's one thing you can do if you have a pile of shares. And then the other one is if I'm already stuck at a price, can't I bet on the way down? So if I'm like, I'm stuck at 14, but I know it's going to go down some more, so I want to bet that it's going down. You can't hold a long and a short position at the same time. You can't short shares with them in your hands. So if I take an option and I use the option to bet on the way down, which is a buying a put, but you're right, or the group here is right, that the premium would be so high that if I set the marker to the price I paid for my shares, right? So I get the right and the ability to sell at 14. If I let it go to exercise, then I get rid of my shares at 14 and I pay out the ass a premium for the luxury of doing it. But if the shares go down further, then I get to profit. So it's like you're paying for the ability to guarantee get out and get all your money, even if it goes down even worse. And then if it does go down even worse, you would actually make some money to offset the premium, right? So if you really wanted to get out, isn't that an option maybe? Yeah, that's exactly it, Daryl. It's just resting, right? Just pining for the fjords. Sour hour is generally not bad, but we're pretty much halfway through it, so yeah, we should see better. It's all right. I spent the day learning Oh, god damn it! Learning options, or at least understanding what TD is trying to tell me and how that relates to my book. Man, I did a friggin' market order, and I'm still waiting on a representative to. killing me here. I have an... Oh! Yay, I'm in. I got in at $19. 19 cents. Thanks, TD. I'm now the proud owner of an written option. Hooray! So I got in for 19 cents for $14 end of the month. And that's a written option. So if it goes over 14, I get my money back. If it goes under 14, I get nothing extra. Good. The only problem is if it goes under 14, I'm basically got a turd burglar of shares that are now worth even less. Nah, it's all good. It's all good. Yeah. Yeah, I just got paid. So someone bought it. So I get the premium right away, which is probably in my account. Let's check. US margin account. And US margin. Where's my cash? Holdings, here we go. US margin. So I made $963 today. And I'm currently up $120 on my contract. So, sweet. Not bad. $14 is where my price is stuck, right? Well, I'm not really sure how to read this because there's a lot of red and a lot of green here. It tells me I'm already up 13%. But I think I gain value as this option starts decaying worthless, right? Because then the other guy basically gets less and less and less and less. And then he has to choose if he's going to pay 19 cents to gamble that it's going to be 14 or higher. Somebody took the call. So no, I did end of the month for $14 at 19 cents. Originally it was going to be 23 cents, but my order didn't execute till now. About time. Rip share price. Oh, we're now under the trend line. At least I got some money today. So that should have been around $780 I got. Let's see here. Yeah, I had about $1,000 sitting in the account. I now have $1,754. Sweet.
So I guess the option doesn't show that. The premium doesn't count. So what I'm seeing is the option decay. So it's going to keep going until I get infinite success. But I don't get to cash in on that. Where that guy's going to see infinite loss. And then he'll just let it expire. In worst case, Ontario, somebody buys all my shares and I get my money back. Yeah, I like it. Oh yeah, I could immediately invest that. You're right. Though if I buy it and it's 10%, $10, I pay commission, so $10, that would be almost 10%. Yeah, I'm gonna need more money before it's worth it. Although I do have 1,700. Oh, no, 10% would be $100. Right. So at $1,000, it's 1% commission. 1% ain't bad. Yeah, maybe I'll average down. You'll get there, Daryl. Yeah, you got to earn your membership in the Thousandaire Club. Yeah. Yeah. This reminds me of Italy. There's Rome. There's where Julius Caesar's from. There's where Brutus is from. There's the Scripti family. And then you march on Rome. And that's how Rome Total War starts its campaign. Oh, wait, you don't march on Rome right away. You attack the rebels. And then you come to power. You three unite. And you form the ruling powers. Look at all these lewd shapes. Yeah, look at the volume. Volume's picking up. Yeah, I guess if I bought some right now and averaged down, then when it goes up to 14, I would have some shares that have gone up 30%, which would get me $300. Yeah, I could do that. Wait, no. 30%? 300 of a grand? Yeah. 100% would be 1,000. So yeah, it's 300. Oh, damn. If I had $1 million, that'd be 300,000. Mm. 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 You'd be printing a house. Life finds a way, Mr. Howard. Oh, here comes the surge. Just after I buy my options at the world's worst price. Son of a bitch. What time is it? Oh, that's the 30, yeah. Okay. So, how many shares can I buy with all my money? 1, divided by can buy 182 shares. Wow, for $1,000. How many shares would I get at this price for 60,000? Oh, instead of 4,000 shares, I'd have 6,300. Oh, sad pandas. Well, I think that's all the steam this baby had. So, I guess now is not a bad time. It's probably going to roll. Yeah. I was hoping it would hug this purple line. Yeah, it might still. Yeah, you know what? I'm in. The price might have got rejected. Count. Let's see if the order got fulfilled. Oh, it did. Sweet. And I owe them $3. So, yeah. The price shifting ended up putting me in a margin call. $3 margin call. Sweet. Well, I'm making money now. Jeez, I'm making money on everything. It's great. Because my option is all or nothing, right? So it's binary. If it doesn't hit 14, then it's fine. If we do go to 14, all my shares have gone back to full price. So it works perfectly. The only thing that would suck is that if we don't go down to or we don't go back to 14, and then I get semi-worthless shares, but I get to keep $800. Not bad. So you can make $400 a week writing calls for something that you already have. That's a neat way to make passive income. Yeah. You would just have to, you would lose out on unrealized gains in the off chance that it blew past your number. But then you just set up the next call for the next week. And you just, yeah, you could just keep setting up calls for just writing calls until the cows come home. Yeah, you could. And then every time you lose your shares, you would just buy back in at some other price and repeat. And you wouldn't lose any money, but you would lose shares, your share power. That's pretty good. Yeah, exactly. Huh. I mean, that's what I've always said about stocks. Like, you clicked here, and you clicked here. That's a percent. So, like, the time we're talking, there's 1%. 1% of $1 million, 1% of 100,000, you're laughing. And I know people that keep money in a bank account and get 1% a year in Canada. Oh my God. Killing me. Yeah, that $14 boss. Not looking forward to it. Oh yeah, what is my average now? Let me check. AMC is at an average of 13. Fuck, I can't read that. 1360. So, if this person buys my shares, I'm making money. And then when my insurance comes in, that's going to go all on the market. So, yeah. And I think they give me back pay. If they don't, it's not a big deal. But I think they do. So I'll have a lumpy sum. And I'm going to use that money to bail out my position. That's what I normally do. I just bail out my position with my day job, which is actually a good way to save money because you can't lose it, right? You're not making bad decisions and you just keep adding more and more and more and more at whatever price. And then when your money's finally free, you're like, holy crap, I'm rich. Because, well, whatever, the 10% or 20% you added went up 50%, and then you got all your money back plus 50% on the new 20% that you threw in. It's like, oh man, stock market's just a gift that keeps on giving. But really, I'm doing this for belts so that I can have a microphone, and that microphone will not hurt his ears. So I did my first option trade today, and we're gonna go get a microphone before the end of the month. Yep. I now remember why I wasn't supposed to put that money on the market. That's my Amazon money. But let it ride. And I got in at an okay price. Yeah, just watch my little option go. Making some serious coin. I've made over $1,300 today, but it's all recovery money, so not bad. And my little option has made $40 so far. So the option's weird. I'm looking at the order book, and it shows up as -40 in the quantity, which makes sense because it's shorted, it's sold. But then the money, the book cost, it comes in as -700, as in you owe them money. But I guess that's their way of showing that $700 via the premium. Because when you short, you have to cover, right? You have to cover that $700. Oh, maybe that's what you have to cover if you want to close the position. You'd have to pay back the premium. Yeah, you'd have to give the premium to somebody else for them to take over the position. But as this thing decays, I'm going to make more money because the premium would shrink. So if I want someone to take over the position to buy out myself, it would eventually move to zero. I think I got it now. Okie dokie. That makes sense. So based on the U shape, yeah, so if we go with this U shape, I think it's the 29th. Gonna eventually have to clean this up. So we finished this U shape on the 2nd. So 3 days from now, or 2 days, 2 more stock days. And then that should finish that if we follow this line. Then the next one will be up around here, which is basically end of month. Probably at best we hit 14. So we might spike into here, bounce off the 14, and that's kind of what this drawing is here. If I remove that, I remove that. So we'll probably come up and smack, or it'll be mute and we'll just follow this blue line. for a bit. Either way, there's not a whole lot of time left here. So I'm hoping it doesn't go take off like a rocket. Like we don't get any of this. But even if we do, you know, I'll survive. I got 11 days to stay under 14. Although I've been rooting, oh damn it. I've been rooting for 14 for how many days now? Let's do the math. At least 26 days. 26 days. Minus 3, I guess. So 23 days. Oh my god. This has been pretty painful. But I'm glad you guys have been with me for almost all of it. When we picked up some new people. Started a small hand job business. It's great. It's a freshly baked what's sadness in malade in French? So pain de malade, sadness bread, or bread of sadness to be more literal. Okay, 30 million so far on volume with 10 minutes left. Yeah. Yeah, Zach was a entrepreneur. He struck out on his own. There's the S&P 5000 Super Lemon. And apparently it didn't do its job, did it? Oh no. Oh, it held for a bit. Then I guess the citrus wore off. This one broke channel, but then pretty much came back down. Oh, those were horrible days. Nasdaq's doing okay. But you can see it's really trying to die. Like, this is normal, normal, normal. This is all good. These are not good. They're just like, kill me, human. And it's like, nope, you're going to live longer. No, fuck you, I want to die. Like, those are not good. They're usually a sign of impending doom. This one's kind of neat. It rolled up. So normally this is a bad sign, but it did it in the opposite direction. Take a look. There's your crazy lightning bolt. See, it's relatively neutral and then angry. But man, what a climb back. December, November. Look at that. Just rip. Ugh, man. Or since April. So like, if you put any money in the S&P, you're up a grand total of 7% since April. Hooray! Silly. What are we up since April? Neutral? We are down 14%. But if you're a lucky person, you can be anywhere between 4% and 11% up. Oh yeah, 3% ain't bad. It could be a lot worse. Could be a lot worse. Just looking up your Buffalo Trace. We got 5 minutes left. Yeah, I'd be down for that if my health gets better. For some reason, I just got vertigo all of a sudden. So I'm looking at the bourbons, Buffalo Trace, and they're all coming at me from the screen. They're like getting bigger and bigger and bigger and coming towards me. I'm like, oh, cool, interesting website. Then I blink and they go back, and it's like, Oh, it's just my eyes. I guess staring at this advanced dashboard thing buggered up my eyes today. Pretty cool. I don't know what's FIL. Yeah. And if it doesn't go huge, still come to the bar because she needs the money. Do you guys take AMC shares? I guess that's good enough for a napkin. Yeah, yeah. That's when we all get our Lambos. Ah, we'll just rev in the parking lot. My Lambo only runs on Patron. I'm sorry. And it's Gucci bags to lubricate its engine. Need like 10 bags to make it home. I wonder if young kids at school are trading crypto like it's like Pokemon cards. Because it'd be like, okay, I'll give you 10 Dodge if you do this. And then it's like, but Dodge could be worth less or more tomorrow versus like cold hard cash. So you could trade Dodge. I don't know. Guess it hasn't got there yet. Daryl. Flashbacks. Ooh, look at that volume. And look at that volume. And look at that volume. Ah, Southern Missouri's not too bad. Oh, that's true. Damn it, is Zach, or he who should not be named, branching out now to crypto trades behind Wendy's? Damn, that guy's everywhere. What an entrepreneur. Okay, well, I got your software hooked up and your phone's been debugged and still down for the handy. I'll just take my Wendy's and go. Oh, you know where to find me. Enjoy, DBW. The mark of the AMC beast, 966. Gasp. Yep. I got reading the chat. We just finished a minute ago. She's done. Wow, that wasn't bad. End to the day. Oh, well, whatever. So, how much money did I make today? $1,653 plus $700. I came out with 4%, and the market gave me 3.4. Sweet. So that option money got me 0.6%. Hooray! Not bad. Cool. Well, I guess that's it for today. Unless there's any questions, we're just trucking along. The last minute recovery was decent, but we're still going sideways. But the whole market is basically going sideways. So, oh, except for the NASDAQ picked up right near the end. Actually, let's see how GME did. Yeah, see, GME just did shit all day. Same thing. We had a lot of energy in the morning, and then it just went roof. Zip. Well, hopefully it all gets better. No, it's not bad at all. All right, see you tomorrow.